we have sprinklers, we have hydrants. Due to privacy law, we do not have cameras in our not have in the washroom. So kindly not be held responsible for any missing item. But we've got you covered. We have a MasterCard that can actually shut this meeting space. Speaking with the coordinator, we'll do that, and we can assure you that your items are safe. Our master point is at the car park where we have the flag stand. We are not having a fire test. But like I said, if you hear the alarm, please be calm. All information will be passed. All information will be passed via the speakers. If we need to evacuate.
And I think we're still waiting for some of our panelists to be here. So we'll give this a bit of traffic. Are you serious? Sorry about that. Yeah, I think 4 Points has to shift their space. They need bigger room. Welcome, Wura. The intention is for this place to feel very relaxed, yeah? And for us to really get going in deep conversations that encourages questions. All right, so I think we still have two more panelists that should be here before we start. So a couple of minutes, and please feel free to interact. Thank you. Music? Good morning again, ladies and gentlemen, and welcome to PwC and Thursday's Executive Roundtable on Nigeria's 2025 budget and economic outlook. We'll be starting really quickly. We've taken a bit of time trying to wait for some of our guests, but I think we should start already and they will join us in good time. Today we have a variety of speakers from the private and public sector to share on this very important topic. Only very recently, the budget got passed, and then we've also begun to think through what Trump is doing in the US. Most times, the thought is global shocks affect Nigeria, and then there's thinking as to how Nigeria affects the global world. But I think hopefully in a couple of years or more, we should be able to sing that song more profoundly, how Nigeria is affecting the globe. So today, we're going to talk through some of these points. What are some of the things businesses like yourselves should be rallying around in terms of strategies, opportunities, bright spots that present themselves from the economic outlook, but also what have we seen from prior years that we need to forestall against. And on that note, I would like to introduce Mr. What am I saying, Mr.? Sam Abu, who is our regional senior partner across West Market area and Nigeria, to give the opening remarks for this event very quickly. Welcome, Sam. Please, a round of applause for Sam. Joke, very quick joke. Sam sent quite a number of us Christmas cakes, during the holidays. So my daughter says to me, she was threatening me, can you imagine? And she says, I'm going to report you to your boss. I said, who is my boss? I'm the boss. And she says, every boss has a boss. And then the Christmas cake comes in, and then I see Sam's name on it, and I say, this is my boss. So she said, I'm going to report you to Sam. So Sam, our boss, and Santa Claus, welcome.
Hey, Siri, thank you. I don't know whether I'm a serious boss or she's my boss, to be honest. Okay, good morning, everyone. I am told that the cutoff for saying Happy New Year is January 10th. So on the 23rd of January, it feels like 2025 is already a very old year, doesn't it? Nevertheless, Happy New Year to everyone. So it's really my honor and privilege to welcome you all to this session. Forums such as these are very important for shaping the kind of conversations that is deeply, deeply required in this country right now. The issues that we're facing globally and locally means that we have to have this kind of critical conversations, and these kind of sessions are of immense value in sharing perspectives, informing decisions and actions that business leaders like those in this room will use to transform their businesses and ensure corporate success for your organizations. And I dare say, it is not just about our organizations, it's also about our country, because we're all stakeholders in this country. And what we do here, right, is important not just for our companies, but also for the country at large. As we step into 2025, we are all navigating a very complex global economic landscape shaped by inflation, commodity prices, geopolitical tensions, name it. And closer to home in Nigeria, we continue to contend with the challenges of fiscal constraints. Taiwo will be here shortly. I'm sure he will shed a lot more light on that. Inflationary pressures. You can add currency volatility to that if you believe it's been stable for a bit, but let's see where that leads us. But we continue to face those challenges in Nigeria. In the middle of all of these challenges, there are still opportunities. And I think for many of the global leaders that we talk to and local leaders, they believe that in all of these challenges, there remain opportunities to the extent that we are able to identify and harness those opportunities. So So those are some of the conversations we'll be having here today. The geopolitical landscape provides a very intriguing backdrop. Across the world, as we speak, there are conflicts raging in many parts of the planet. Ukraine in Europe, Israel in the Middle East, Sudan in Africa, and closer to home in our part of the world, we're experiencing splinters and fissures in ECOWAS. As we speak, 2, 3, 4 members of ECOWAS have pulled out of the economic bloc. So, and as Siri mentioned, just this week, the Trump administration has begun its term, and this signals significant and potential shifts in trade policies, international alliances, and I dare say the global economic order. All of these developments have significant implications for us in Nigeria because our economies, the global economy is interconnected, our economies are all interconnected, and all of these decisions made anywhere in the world has an impact on what we do in this part of the world. So, just this week we launched our 2025 CEO survey, and I think at some point we shared that with many of you here. And whilst CEOs and business leaders remain concerned about economic volatility and geopolitical tensions, they are optimistic about the resilience of their companies and the strategies they are deploying for success. So all of these developments across the world resonate very strongly. Taiwo, very good to see you. So welcome to this event. So in these coming sessions, we'll delve deeper into all of these issues, the global economic, geopolitical and economic issues that we're talking about and how it affects Nigeria. And we will talk about what it means for businesses and the strategies that businesses need to deploy to navigate these complexities in this time of uncertainty and volatility, and opportunity as well, if I may add. These priorities, these developments across the world means that our conversations in Nigeria have to be aligned with the shifts that we're seeing across the world, because Nigeria is not isolated. What happens in America, what happens in Ukraine, what happens in the Middle East, what happens in China has impact here. If I saw something that Taiwo posted about Trump's external revenue service and how the conversations we're having about our fiscal space has connectedness with whatever else is happening across the world. So those conversations start here today, because what we talk about, what decisions we make in our country, in our business, has the multiplying effect of what happens in our economy and what happens to Nigeria, which I believe we're all concerned about the direction of the country. So once again, I thank you all for being here. I welcome you all. My job is the easiest job of all, is just to say welcome and enjoy your time with us today. So thank you.
Thank you very much, Sam. And maybe very quickly on that note, I'd like to introduce our partner, media partner, the CEO of Business Day, Frank Aibogu, to give his opening remarks. Why? You don't want us to clap? Frank has been an exceptional partner alongside Business Day for most of the events that we do. And when we thought about who to partner with for this event, very naturally, Business Day came to mind. So welcome, Frank, again.
Yes, Siri, thank you very much. And ladies and gentlemen, good morning. I think Sam has already done the welcome. We do go out on morning walk together. No, not walk. I walk and he's sprinting. And yesterday I had to hold him and say, hey, we're supposed to catch up and just agree what we do here today. And we said, well, hey, I mean, what are we going to do? Just say welcome. And he's done that. So I'm going to add my welcome to that of Sam this morning. I'm very delighted as our team from Business Day that is here as well, that we are able to gather here this morning just to talk about the economy. Let me say that virtually every business person that I have spoken to this year seem to believe that 2025 will be a better year than 2024. I see some heads nodding in agreement and some saying amen. But I must say that, there are different ways to do these things. You can desire it or you can decree it in the name of Jesus. But I think generally we must, first thing is we have started from a very low base. And whatever it is that happens now has to be up, I hope. That's one thing I'd like to say, that we need to approach our review of the economy and the trends that we see with some positive feeling. Last year was really bad, and for many reasons. That's one point. Second point, as a journalist, I have been thinking about Donald Trump and the massive shift that we are seeing already, only days after since he was sworn in. But I thought it's important to contextualize Donald Trump's second coming. He's there for only 4 years. He's limited, and so are his policies limited by that time. I believe there won't be any other American president like Trump in a long time. So this is, whatever it is we see and hear today, will be for just that time, whether positive or whether negative. Final point I'd like to make is to say that whatever it is that we do here today, it's important for us to begin to look at key things that we need to do to move this economy. We need to get big champions, a whole nation generating 4,000-5,000 megawatts of power. I was having a conversation with Aliko some months ago. He had just come back from a meeting of business leaders with the French president. And he said to me, Frank, you know what? The man I was sitting with, I was telling him that we were generating 4,000 megawatts of power. He's a businessman in Turkey and he generates 12,500 megawatts of power. And a whole nation like Nigeria is generating 4,000-5,000. So I believe we need big champions in power. We also need big champions in agriculture. We need to feed our people. And I'd like to just end up saying, Tayo, I didn't know your job was going to be as difficult as this. I didn't know it was going to be as controversial as this. Even when we finished passing this bill, if you contest for a local government office, I don't know whether anyone will vote for you. But I think it's important to say one thing. The governors met and proposed what I think is a compromise. We thought about doing an editorial in Business Day just to shoot it down. If you look at whatever the governors have proposed, it is more about keeping the status quo. And what's the status quo? I mean, Dick Kramer, who was chairman of our editorial advisory board for many years, used to tell us, when government makes an announcement, when government says anything, get your journalists to look at it this way. And how do we look at it? Is this announcement about sharing the existing cake, or is it about making the cake bigger? And it's the way at Business Day we look at government pronouncements. Whatever it is that the governors did is about cake sharing. It's about cake sharing. They have forgotten that Nigeria needs to be more productive, and we need to incentivize production. So if you give equality, population, 3 times more incent or weight than derivation, I think we're just joking. And I hope we're not going to joke here this morning. Welcome again, and thank you very much.
That was a powerful charge. Thank you. A round of applause again for Frank for giving us that charge. And I think without wasting much time, one of the things that Frank just mentioned that really resonates is how can we start to identify champions in the room here that can push us to that place of productivity beyond just sharing the existing cake. And on this note, I'd like to invite Olusegun Zacchaeus. We call him Sheg Zach or Zach. He's our partner and lead at PwC Strategy and Practice for West Market area. And he'll be looking at doing a deep dive on the macroeconomic policies. He's going to look at the outlook. I hope it's positive. Most economists come on a negative tone. Please give us the positive one now, eh? So a round of applause to Shegu.
Thank you. Thank you, Siri. Thank you. Thank you. All right. Good morning, everyone, and thanks for having you all here. I think I was speaking with Taiwo on Saturday, and we sort of, at the session, we reflected on the Nigeria outlook. What I will do today, and I'll be taking this presentation with my colleague, Kenneth, I will talk about our view of the outlook. But more importantly, Frank has said it's going to be a better year. And obviously, you need to put better in context, right, from where you're coming from. But I'll speak to a few factors that I think you must sort of reflect on to also let you get into your conclusion of what the outlook is. But I think for us as PwC, it's not to end on what the outlook is, right? It's to begin to get you to think about two questions. Where are the opportunities for you as business owners, right? And what should your strategic priorities be focused on? So the way this presentation will go is that I will talk about the outlook, the opportunities from the outlook. Kenneth, who will be introduced later, will talk about the fiscal and budget outlook. And then I'll come back and talk about what we need to do to tap into the opportunity and manage the risk in the outlook. So I'll start. I think 2024, we've all talked about it, and it's a year we'll radar for improving significantly. Then I'll land by talking about the global landscape. So let me start. On the monetary side, three issues you need to think about. Will we have better FX stability in 2025? I think the clear answer will be this, yes. And when you talk about monetary policy, the factors you sort of reflect on that determine the FX regime. And there are 6 factors we sort of put together, right? Which is the process of through which you discover what the price of FX is, right? I think on that has improved significantly, and there's a better way to determine what the price of FX is in the market. The second point around liquidity, right, is the fundamental area where we have issues to resolve. And when you think about liquidity, the question you sort of think about, and I'll share this slide, are what are the factors that drives liquidity within the market, right? It's a combination of several things, but it likely depends on the dollar you earn within your economy, right? So how do you earn dollar within the economy? Obviously, oil production is one fundamental part, right? And I think there's a positive outlook on that. There's better oil production, and we don't expect oil prices to go down significantly in the global market, despite the new Trump push, for oil pumping. So we expect from that note, if production is secured, right, there'll be better inflow from that perspective. The second area you think about when you think about FLT, right, and you're thinking about liquidity, is to think about the foreign investment. Will that improve within Nigeria? I think from the portfolio perspective, we've seen a lot of nice, positive feedback in the press, especially for the portfolio investors, and we expect that has been progressing. And given the high interest rate environment we have, right, also given the fact that in the global economy, the interest rate is trending down, right, so there'll be more pull towards Nigeria. That's also some sort of positive. On the longer term foreign direct investment, we see that evolve and gets better a bit gradually, right? So if you pull all this together, you realize that on the supply side, which is source of liquidity, we will do a bit better. If then sort of also add this to remittances, that has been increasing dramatically, and we expect that to also continue to improve. What are the other factors you need to think about, right? Issue around supply-demand gap, I think there's a significant improvement in that, right? And you know, prior to now, we keep saying, you know, the CBN is owing people, so to speak, dollars. I think we've made a lot of progress on that. So if you put all this together and ask yourself the question, will we have better liquidity, better FX environment? I think we will. And what would the value be? I think the value will be reasonably around what we have right now, except there are significant shocks that happen to the factors I've talked about, which will include if oil production falls, or if there's a dramatic decline in oil prices, maybe because of the supply overload, that can potentially offset, you know, this positive outlook on this. But there's one fundamental area that's still sticky, which I hope will improve in 2025, which is investor confidence. I think we're not yet there, and I think a lot of investors, local and global, they're still taking a cautious approach. If this also improves better in 2025, right, the overall FX environment will be better. So to answer the question on FX liquidity, I think this will be better in 2025. Second question on inflation. Right, so inflation, when you dimension conversation around inflation, there are a couple of factors that drives inflation. One, if you go through the economic theory, they say it's a matter of supply. That in the long run, inflation is a monetary phenomenon, which simply put, inflation has to do with the amount of money in circulation chasing few goods, right? But if you look at the context of Nigeria, that is true, right? There's also but the context of what you call tactical shocks, which are supply shocks, which we also need to fix. So if you pull all this together and ask the question, if inflation is a monetary phenomenon and we're at high of 30+%, and we've done all the monetary actions of raising interest rates, right, would that have potential impact in 2025? I think yes, it will continue to impact inflation, right? Obviously, the area you must also think about is not just interest rates, it's the amount of naira liquidity that flows into the economy. A simple way to put it is that if we do expenditure of 50 trillion, and we actually achieve that expenditure, that's a significant amount of liquidity into the economy, which also sort of pushes inflation high, right? So from that perspective, inflation will abate just because of base effect, which means last year was really high, right? Will we fix all the supply shocks, which has to do with food production, etc.? The answer is we can't fix them in 2025. But coupled with the base effect and high interest rate, we believe inflation will be better. Obviously, there's work being done around rebasing inflation competition that may also have impact. So inflation outlook better, but we're not going to get into twins. That's our view as PwC. The third part you ask yourself as business is around the interest rate environment, and I know quite a number of bankers are here. I don't expect that to abate, right? And reason being, for you to keep inflation low, for you to continue to attract foreign liquidity, you need to have a reasonably high interest rate, right? And if the monetary continue to function the way they're functioning, you realize that interest rate may reduce a bit, but it still be high, both to manage liquidity, external liquidity, and then increase attractiveness of Nigeria instrument to foreign portfolio investor. So if you take that, that's an angle. A second angle I'll speak to, let me go to the overall framework, is the point around attracting investment. I think quite a lot has been done to unlock investment. I remember an example one of my clients gave me that, yes, so they're seeing a lot of positive, but they go and meet foreign investors that they should invest in company. And the question is that, okay, we're still looking, right? So if you look at foreign investment, I think from portfolio perspective, that's, you know, investors bringing money to buy shares, to buy our high yield fixed income instrument, that will continue to grow high. But from an FDI perspective, we expect that to improve, but it won't be significant. And so that takes you to a question. We cannot fund our growth locally by only Nigerian capital, right? So we need significant foreign capital to join us to fund growth, right? So when you take all that and you realize that growth will grow, but the amount of capital you need to drive significant 6% type growth will be tricky to have in 2025. Last two point I'll make on this slide so that we can move on quickly is on the consumer end. And we spent a bit of time thinking about consumer, right? And we're all consumers. What are the factors that you would drive consumer in 2025? So there are two angles you need to look at, right? You look at the angle of income. Income means how much do consumers earn? Will that get better or not, right? Obviously, we have what economists call wage inflexibility, right? Which means our wage do not increase systematically with the economy, right? A lot of work is being done around the transfers, etc. We know that will make impact, right? But we also, if you juxtapose that with a typical Nigerian consumer expenditure, you still realize that most of the consumption will go to food, right? So when you then begin to talk about disposable spending for consumers, especially those that are within bottom of the pyramid and in the mass market segment, that will continue to be tricky, right? And I'm looking forward for the panel on the consumer market, because the market then needs to say, look, how do we adapt to this constrained spending outlook that we have for consumer within the market? I think in terms of costs, which consumer face, because inflation will abate, right? That cost will also be reasonable, but there are other structural factors in terms of employment, right, and which remains significantly low, right? So if you pull all this together and ask yourself, 2025 consumer will do slightly better than 2024, but we're not there yet, in which our household expenditure will grow significantly, right? And that also creates a thinking within the consumer market companies to say, look, how do we navigate this environment? I think the last point I'll speak to is on sector. Right, and I think from a sectoral perspective, what we see is that we have quite a number of reform on key sectors that will sort of stimulate growth and also attracting investors in those sectors. And we see that continues to happen. We see a lot of improvement within the oil and gas sector. We see some progress within the mining sectors. But obviously, manufacturing is also a sector that I think will get better. But the problem with manufacturing, again, is that there are structural issues, and that sector is more vulnerable to structural issues, that they need to fix. So manufacturing will continue to move, making progress, but it won't be as fast as other sectors. I expect oil and gas to recover a lot faster sectorally in 2025 than maybe, for example, manufacturing. Obviously, in the GDP rebasing, right, other sectors like real estate have been brought in, which is also a significant sector. We see that continue to also add, to the overall GDP pie within 2025. So if I pull all this together, and I'm not trying to exhaust the entire slide, and ask the question, how do we summarize the outlook for 2025? I'll take Frank, is a better year. I always like the word better year, because better is always the context of the baseline, right? So 2025 will be a better year. GDP will grow, 3.2, 3.5. That's what we think. We think inflation will abate to 20s, right? And given some of the policy and given all the base effect, we think there will be better FX stability, within the environment. We think the investment outlook will be muted. It will improve, especially when you talk about fundamental foreign direct investment. So in summary, better year, in 2025. But the question you must ask yourself is, what does this mean for you as a business? So if you look at your profit and loss and say, look, how would it evolve given the macro factor in 2025? So one, on the revenue side, we expect some improvement, obviously, given the high inflation. We also, given some of the policies that have been done in terms of consumer intervention, we expect some progress around the revenue end. Cost pressure will remain. Obviously, FX is stable, and I'm sure we understand what stability means. It doesn't mean it's going low. It means it will be in a predictable range in which you can do your business, right? So it's not that we are going to 1,000 or 800, right? So given the input of FX, into a lot of activities that we do, costs will continue to be constrained. And you also need to look at some of the global development. Trump wants a stronger dollar. A stronger dollar also has its own implication, right, to imported inputs, right? So costs will continue to be high. That's what we see. Finance costs will also remain high. I'm sure, the bank MD that will join us the panel will share a bit more insight on that. What we are hoping is that some of the initiative of the government, in terms of intervening in credit, will have impact on the economy. I think I spoke about the consumer, right? So pulling all this together, what are the themes? Because yeah, there are challenges, but there are areas of opportunities. So we sort of thought about this and said, what are the themes of opportunity you must think about as business owner in 2025? We have 8 areas, I think 8 or 10, but not necessarily exhaustive, right? But activities that leads to export will be critical for businesses in 2025. Finding your corridor around the African Continental Free Trade Zone will be key, and also looking for any business that will take you outside Africa to earn dollars. I think there's significant opportunities there. Targeted value chain enhancement, I think Frank spoke to it. Agriculture, and if you listen to this, it's targeted value chain. It means you don't go into a sector and try to play across the value chain. You must understand the element of those value chain that are profitable for you as a business. So if you take agriculture, agro-processing will continue to be attractive area in terms of an investment in. Obviously, also given some of the government policies that are happening, that will be an attractive area. And the third point is how to begin to do value addition. Essentially, value addition is like, as you look at sector, you're looking at from primary product to secondary product to tertiary product. Obviously, most money is made between secondary to tertiary, right? What are the sector you can do better value addition? We know mining is significant. There's a lot. Kenneth will speak on the budget. Things in the budget that's also speaking to that sector. We know oil refining continue to be attractive in 2020. We're going to be attractive from a value addition perspective. Population targeting the Gen Z and Gen Alpha will also be an area to focus on. On the mega trend and innovation focus, I think this is very, very important. And if you look at the what are the big mega trends that we see globally? Maybe I'll talk about 2, which we know. We know about AI, right? And we know about sustainability, which is a bit, shaky now, right? But from AI, the things that you must understand that AI is not just about the software. It's also much more about the infrastructure, about the data warehouse, about the broadband infrastructure. We think that segment will continue to be an attractive locally as AI sort of take hold across the globe for us to build the infrastructure that AI can ride on. And the second point is on the sustainability end. Obviously, for Europe, we'll still stick with the concept around sustainability, and we need to ask ourselves the question: what are the things you can do that are right on the philosophy and principle of sustainability? Industry shift and consolidation is key. We know sectors, financial services, we know insurance, they will do some regulatory induced capital raising, and for you as a capital holder, you need to know how to position to play in those different sectors. Culture and entertainment, I'm not going to go deep, but obviously we've seen that very attractive. The Dirty December, we all know about that. I think lastly, let me just end with this. Sectors have government policy focus, conversation around CNG. We need to see how we can sort of play in those spaces. So in summary, I think 2025, no matter how you look at it.
5 fiscal outlook, particularly the budget. What's in there, we look at the historical context, and then also look at the future. What's in the budget, what does it mean, what are the opportunities? Okay, very quickly, when you look at the historical view, since after COVID, from 2021 to 2024, revenue performance has been relatively good, particularly in the non-oil sector. The big challenge is actually in oil, and we all know the challenge there in terms of our production levels and being able to ramp up production and getting our crude to evacuation point and so on and so forth. So from a revenue perspective, oil has always been challenged. And then when you look at the revenue side as well, in terms of, the expenditure side, consistently we have had significant performance from the revenue expenditure side. But the big challenge has always been capital expenditure. And you see the trend has been that it has always been sub 100% performance from a capital expenditure perspective. And this has significant ramifications in terms of the performance of the country as a whole. Why? Because that's where you get the bulk of the return on investment with targeted infrastructure. So these trend that we see coming from the past extends even into the future. And when we look at the performance of the budget assumptions, we've not been fantastic in the assumptions for the budget. So you see, repeatedly, the oil price, usually we get that correct because it's a straight peak from what specialists have produced. But when we look at the oil production and what we estimate as what we want to achieve as a country, we usually fall short of those targets. Same as the exchange rate, as well as inflation, and of course, GDP growth. But in the end, despite all of these assumptions, if you look at what we do, in terms of the budget performance, non-oil, as well as other sources of revenue, we still perform. And in terms of expenditure, we do well on the revenue expenditure side, recurrent expenditure, but capital expenditure is usually the big challenge. Now, in the 2025 budget, several assumptions have been made. And the first one is the benchmark price of $75. In our view, as PwC, we believe that this is achievable. But that's, when you look at the slide before you and you see the traffic light, that's the only one that seems to be green. And that is the only one that is an exogenous variable, meaning that we have no control over that. And there is a significant risk on that, even though in terms of our outlook, as well as the reports coming from several experts, it is the prediction is that crude oil price will be in the region of $75 across 2025. However, there are risks, as someone mentioned, in terms of the disruption from the US in terms of the Trump administration. Already, there are conversations being had with Trump speaking about the Russia-Ukraine war and saying this ridiculous war has to stop. Now, if that happens, it means that Russia doesn't have to layer on its crude to get into the international market. And it's also said that there's an intention from him to win the Nobel Prize for peace in his current administration. So there would obviously be some intervention in the Middle East. And what that could do is that some of the sanctions which you expect that will be imposed on Iran may not come true. And therefore, about 1.6 million barrels of crude that gets into the international market, from Iran would continue to get into the international market. And he has said, drill, drill, drill. Now, what that would mean is that there could be so much supply, and that would impact on the price. So there is a risk which we, as a country, cannot control. And then you look at the other factors. Crude oil production. In our view, we believe that this is doable. In 2024, there were several significant transactions that occurred where commitments have been made by the local players who acquired those assets to ramp up production. So we had the big transaction, Shell sale to Renaissance. We had the NAOC sale to Oando. And of course, we had the one from Equinor to Chapal, and so on and so forth. Now, all of these buyers have made commitments to increase production levels. And mid into 2024, the MD, the group MD of NNPC, already declared a state of emergency on our production. So we expect that there is, some of these things may begin to yield fruit towards second quarter, third quarter of 2025, and potentially could give rise to us achieving those targets. And already my colleague mentioned the impact that could have from an FX perspective. Shell already invested or committed to invest about $5 billion in the Bonga North oil field. There's an expectation that the existing production could also increase by upwards of 100 1,000 barrels per day in that regard. But the big impact of that investment will come through in 2029. So in terms of the outlook, it's looking quite positive. I wouldn't touch on the FX expectation, because I think Segun Zaccheaus already hit the nail on the head on that, as well as inflation. The other one which I believe we should touch on is the 4.6% GDP growth rate, because that has implications in terms of the impact on businesses. There's a saying that you cannot grow faster than the economy, right? But that 4.6 GDP, we take it with a pinch of salt, because the expectation from our outlook is that maybe we'd achieve about 3.3. It said that in 2025, 9 of the countries that would grow fastest, 9 of the 13 are actually African countries. But unfortunately, we will not be there. I think, our growth rate estimated at 3.3 will not get us there. And this is particularly important because of our fertility rate as well. When we continue to produce kids, that means our GDP per capita will continue to drop, right? And someone was asking me, what is happening with our middle class? And I said, oh, I'm here. And he said, no, not you, because you're not middle class. Probably he hasn't seen my pay slip. But the point is, as fertility continues to increase and GDP growth does not match that, then there's a squeeze on the ability of people to pay, the ability to mobilize credit, deposits, the ability to extend your market in terms of FMCG. And that's why people begin to look at other strategies to continue to improve their businesses. The proposed 2025 budget is ambitious. It's at almost 50 trillion naira. 13 or 14 trillion naira of that would finance the deficit. So our debt stock today is estimated at upwards of 140 trillion. Debt to GDP rate above 50%. What we are saying is that debt stock is going to increase in 2025, expectedly, because government would have to borrow to fund the budget significantly. And if you remember my earlier slide, one of the places where we very well perform is in terms of debt servicing. And it goes without saying, because you don't have anything to do with that. You've got to pay your principal and interest. So these are some of the impact that we see in terms of the budget as it comes through. But there are some focus areas that could be important, as highlighted already. Industrial development is one of the key areas that government is looking at. So in terms of the policy reforms, agricultural laws, taxation, special agro, industrial processing zones are a target of the government and provides opportunities. Already we've mentioned the importance of CNG, the small and medium enterprises, and mobilizing tourism as much as possible, and as well as some of the initiatives around ease of doing business. And I'm sure Taiwo would also come and talk about some of the initiatives around reducing some of the exploitative taxes that are levied on businesses and how some of the policies would impact on that. Another massive area would be infrastructure development. The national fiber optic cable is expected to be extended by an additional 90,000 kilometers. There'll be significant focus on trade enhancement, the Africa Continental Free Trade Area, and so on and so forth. 50 trillion sounds like a lot, but when we analyze it and look at that number, it's not quite enough for Nigeria. If you look at our total budget today, it's when you add the states and the federal, and then you divide that by our population, we have budgeted about $206 per Nigerian. When you compare that to Kenya, compare that to South Africa is doing more than $1,400 per person. Kenya is doing about 500 and something dollars per person. It seems ambitious, but the expectation is that, for a country of this size, that's what's required. Our real problem is generating the revenue to meet up with, our infrastructural needs and to deal with the debt issue. So I'll call on Segun Zak to just bring everything together and say, what should businesses be looking at, and what are the expectations? Thank you.
Thanks, Kenneth. So to land all this, because at the end of the day, is what are we going to do about it, right? And if you notice, we try to also highlight area that the opportunities and that you must think about as businesses. But what must you do as businesses? And what we've tried to do here is to put together a simple, what we call response framework. And I'll spend the next few minutes talking about it, because at the end of the day, for us businesses, is what we can do that we will be able to control. So there's 7 thoughts from PwC for you to take into consideration. And the first thought is really one around relooking and reinventing your business model. And the logic around that is, if you look at some of the factors that are driving the business environment now, you realize that the old business model, how you're configured to deliver value, cannot and will not sustain into the future. So as we enter 2025, you need to ask yourself the question, how do I configure the process of delivering value? What can I remove when you call disintermediation? Are you using a middleman that you can disintermediate? That's for an example. Or are your product physical and you can translate them to digital, right? Every business must think about that question. How do I reinvent my business model? I think the second point is that we realize that because of the pressure in 2024, quite a number of businesses cut back on their market play and sort of were a bit more conservative on their go-to-market. But we think, given the optimism and some of the, foundation we've laid on 2025, I think we need to reignite how we go to market. If you remember, I talked about opportunity around, demographics, the Gen Z, etc. and all that. Every business needs to go back in 2025 and re-energize how they play within the market. The third point, which is fundamental, and that can give you advantage both through up and down cycle, is just rethinking your cost capability. And this is very, very important. We always look at this, you don't just cut costs for cutting cost sake, right? Because typical response of every institution is that when there's a shock outside, you just want to cut the easy cost, right? But how we advise business to look at it is that you ask yourself the question, what are the top 3 to 5 capabilities that differentiate me as a business? And from business A to business B, it will be different, right? Once you can lay hold of those 3 to 5 capabilities, every other thing outside those 3 to 5 capability becomes candidate for cost cutting. But the capability that are key to you becomes candidate for investment. So having a capability-based thinking to cost optimization is part of what businesses must think about in 2025. And number 4, I don't think I should overemphasize that. You need to reimagine your tech and digital play, and we see the rapid advancement of technology is really, really rapid, and we'll talk about that in a panel. You need to ask yourself the question, how well am I using technology and digital in delivering of value to the customer, right? That, if you have not thought about, you must think about. If you are thinking about it, you must take that to another level, right? And I think the last 2 points I will make is, obviously, talent will be critical. We must continue to look at our talent, how to retain the best, and how to navigate some of the talent war that is happening within our market. I don't know if you are experiencing, we are experiencing as PwC. I think the last point is stakeholder management. There will continue to be a lot of policy initiative, tax reform, sectoral reform. Every business must take stakeholder advocacy a priority. It must be a pillar of your strategy so that you are proactively managing the impact of this policy on your business, and your business is agile enough to respond. So these are some factors you must think about. And at this point, Kenneth and I will say thank you for listening to us. Yeah.
Thank you so much to our chief economist and chief fiscal. I just gave Kenneth that title, but chief fiscal officer. All right. So I think one of the key points that Shegun brought out here was around reinventing your business model to align with the economic realities. And it's also what forms the backbone behind the next session that we're going to have, where we take a deep dive into the financial service sector and the telecom service sector, but also the real sector. So this is really about tailoring all that we've heard now to suit, where we are working and what we need to do differently. And I'd like to call on Chioma Obaro, our partner in financial services space, who would moderate this session for us. Please, a round of applause as Chioma comes on the stage. Hey, Chioma. You need some help? Thank you.
Thank you, Esiri, and once again, good morning and welcome to this event. I will stand on existing protocol and I'll just go right into the panel session. Let me first welcome to the stage no other person than one of our esteemed guests, Taiwo Oyedele. Taiwo is the chairman of the Presidential Committee on Fiscal Policy and Tax Reforms. As many of you would know, before this role, Taiwo was doing what the combination of Kenneth and Shegu did today. He was the fiscal policy partner and Africa tax lead at PwC. Taiwo, you're welcome. I would also like to welcome on stage another esteemed guest, Mr. Olusegun Alebioshu. Shegu is the Managing Director and CEO of First Bank of Nigeria Limited. Welcome, Shegu. Let me welcome one of our bosses. I know Siri introduced Sam as one of the bosses. We'll be meeting another one of them, no other than Femi Oshinobi. Femi is the Consulting and Risk Services Leader for PwC West Africa. Femi, you're welcome. So that it doesn't seem like there's no gender equality in PwC. So I would like to welcome Obiageli Uboma. Obiageli is standing in for Carl Toriola, the CEO of MTN. We are honored to have Obiageli with us. Obiageli is a risk executive and business leader with over 20 years experience in leading financial institutions in the UK and Nigeria. And she's currently the Chief Risk and Compliance Officer of MTN Nigeria. Another welcome applause for her. You're welcome, Obiageli. I don't need to look at my slide to introduce this next panelist. Join me to welcome no other than Wura Oluwafeku. Wura is a partner in PwC, wearing so many hats. She is a financial services expert as well as our risk consulting lead in PwC. You're welcome, Wura. Okay, so let's kick off with Taiwo. I'm sure you knew I'll be starting with you. So just having listened to Shegu and Kenneth speak about the budget, the physical and economic growth for 2025. What are your views around the implications of this on different sectors, financial services, oil and gas, manufacturing, telecoms? Sort of recap or summarize the entire presentation for us. Thank you.
Yeah, thank you, Sherman. Good morning, everyone, and thank you, PwC, for inviting me. It's good to be back at PwC for 1 hour. And it was good that Shoma reminded PwC that they paid me one person's salary for doing the work of two people. Maybe we can discuss that later, Sam. And the other point is my brother, Frank. I will not even make any attempt to contest for any. They will not vote for me. So I'll stay on my lane. All right, so thank you, PwC, for the outlook, Shegun and Ken. I find it quite useful. I'll make very brief comments on some of the points you raised and the way I see them, right? So the first one is to do with inflation. So I hear people say every time that 15% is not possible. And I don't understand why they're saying it's not possible. If you look at the average inflation for 2024, it's 33%. Okay? If things remain as bad as they were in 2024, in 2025, nominally, inflation will be 25%. Why? That's the base effect. You had 100, the price went up by 33 naira, it became 133. When you do year on year, you are comparing the next one with the 133. So 33 over 133 is 25. If 2025 is as bad as last year, we'll have 25. But the effects, I'm giving you facts and data, right? Yeah. But if you look at what were the factors that pushed inflation in 2024, FX pass-through is the biggest factor by a mile. We moved from 900, ended at about 16. At some point, it was 1819. I think that Nigeria is one of the most resilient countries in the world. We should not be talking about 34% at the end of December. We took that shock of FX pass-through. We also took the one on PMS. It wasn't only PMS alone, diesel as well. In addition to that, and I hold a different view, and I know I'll get into trouble now because media will report it the way they want. The MPR, as far as I'm concerned, was a factor that was pushing inflation up, not bringing it down. Because you need to finance your working capital. If you finance your working capital at 35-40%, you will recover it. Look at manufacturers. They have unsold inventories of over 1 trillion. That's finance tied down. They will recover it. All those three major factors are not going to be there in 2025, or at least to a very limited extent, if at all. That's a key point I think we should bear in mind. And therefore, I think that, I take the point from Shegun about we want to spend 50 trillion. The view I hold, my own view about the economy is usually slightly different from the theories. I think that you only stoke inflation from the fiscal side if you inject new money. If the money that government is spending is from taxes, is from resource revenue, and is from borrowing, not from the central bank, then the impact on inflation is muted. Otherwise, the Nordic countries should have the highest inflation in the world. These guys spend like 40 to 50% of GDP every single year. So I do not think, because the government is committed to not printing new money to spend, I think the 50 trillion will not stoke inflation. So the last point I want to make is around, the FX, oil production. The way government calculates the oil production is they add condensates. So we're already at 1.8. 1.8 is not 1.9. God bless you, my brother. It's even 1.9. It's not very far from 2 million, right? If you're at 1.9, you are looking for 106,000 barrels per day. And there's investment that is coming in. I actually think that the production volumes are realistic. I'm more concerned about the price than the volume. With Trump and drill, right, you're likely to have lower prices, which, to be honest, overall, I think is good for Nigeria because there's a payoff, or you call it a trade-off. So prices, pressure will be down, government revenue will be down. It's okay, we'll balance out. So at the end of the day, if you can trigger productivity, everything is then okay. So let me quickly answer your question. I know I went around like that, right?
It's okay.
So the way we see the reforms are that these reforms are structural. And that's why Nigerians are feeling the pain. And it's honestly very painful, what we've gone through. And you can imagine if I'm saying that in a room of, Ken is not middle class, Ken is part of the elite. If you see the numbers of how much Nigerians earn, I'm not sure there is even middle class in PwC. A lot of them are just up. So, if the middle class and the high income earners are feeling it, you can imagine what the ordinary person is going through. Wake up in the morning, you have no idea where the next meal will come from. It's hard. And when you're hungry, there's no reform that makes sense. But those things were necessary. And I said before, it's the first time in the history of Nigeria that we remove subsidy and we set the market structure to determine the price, not the NMPC. I know the central bank is going to introduce a code for FX by the end of the month. That would improve the transparency issue that you raised. Once you address transparency, you've taken up the pressure on the FX significantly. I made mention of one of these points last week. About $20 million every day is off the market. Some of the reforms we are doing from the fiscal side, it's about $4 billion we are taking off the market as well. Where today, Nigerian businesses are being asked to pay levies, taxes, and regulatory fees in dollars. It's about $4 billion. Once we pass our tax bills, that's off the market. As we are taking off those pressure from the market, we're seeing improved liquidity coming in. Diaspora remittances, NMPC alone, the amount we expect to go to the Federation account this year should be in the region of $10 billion. What did we get last year? It wasn't up to 2. Right? So just imagine those factors. I honestly think that we should not just be talking about Naira exchange rate stability, we should be talking about recovery. I do not think that 1.5 is the fair value of the Naira. I think Naira is undervalued. Thank you.
Thank you, Taiwo. And I think with this, you can be rest assured that we are voting for you. I mean, so just speaking on what Taiwo said about the way to grow the economy being through, production, expanding what comes into the economy. There's no other person to speak more to it than Shegu, being the financial services, the people that hold this money. So Shegu, how do you think financial services will contribute to economic growth in 2025?
Okay. Thank you, PwC. And it's good that Taiwo started this discussion. I actually, and I've said it many times, many people think I'm too Nigerian in my thoughts. But not. I actually believe that 2025 will be a far better year than 2024 in many ways. And based on the information I have, and understanding. As Taiwo said, inflation will definitely come down. Base effect is one. Food inflation itself will come down as people invest more in agriculture. And you know one funny aspect of life? People in rural areas, any year that you have food crisis, the following year, there's always surplus. People go to farm on their own to cure the hunger. So when they do that, 2 years after, there will be too much food, they will come back again, and then another crisis will start. That is it. If you sit with farmers, which I do, some of them will tell you that, oh, you just farm every year because you don't know the year you will win. But the year you don't farm, that's the year you will lose. So I see that coming. So I don't see a teacher in the village having lost a lot of money to fuel subsidy removal, all kind of things, will sit down and say that he's looking for food from heaven. you have to go to farm, right? If you remember what happened during SAP, every civil servant started going to farm, started having farmland. And I don't think anybody will do anything different this year. So I expect as rain starts, people will start, at least they have to augment their income. So I see food inflation going down this year. And if inflation goes down this year, which is almost 30% or whatever of the inflation basket, it will. Again, fuel price not likely to go up again this year, because if you speak to Dangote, which I did many times, and I asked them when fuel price was, when diesel was crossed about 1,000, and I asked them, and he just asked me to divide, I think 116, just do 116 divided by something, and you give me the market price. So I said, oh, if it really comes to 1,000 or 900, oh, they said diesel will come to 800 and something like that. So they knew. I mean, you can do the maths, you can work, and I'm some Mr. Bush knows all the maths himself. So they all know that you can see fuel prices. So we're not going to see the kind of spike you saw last year. You also admit the fact that in 40 years, that was the first time we will have real price for petroleum product. I'm sure when we were in school, we went on riot as students. When we wanted to increase fuel price, or when the top is small, they chase us out and lock us up for 90 days, right? And then, but here, in our lifetime, we have a president that was bold enough to take out fuel subsidy. If there's nothing, this government, if there's nothing you credit them for whatever reason, generation yet unborn should thank them for that bold initiative. There are a lot of world-class papers on why reform is difficult in Africa. Everywhere. In my master's class, there are papers that would teach us. But somebody defeated that hypothesis, and we are free. That will give us $700 million on monthly basis in savings. In 12 months, that is $8.4 billion. So when Taiwo said $10 billion is coming, from that alone is 8.4 before you add other things. So that tells you why CBN is bold enough to tell you ABCD. Indeed, if I would give you another, most of their swaps in CBN, they're returning it now. This January, they returned some money to some banks, all those FS swaps, which means that they have sufficient FX to return your money back to you. So that alone, in the market today, everybody is crashing foreign currency deposit rate. Mr. Ogbeche, if you have one with me, your rate will go down. So here is it. So it's telling you, I'm telling you now, I mean, where I sit and what I see. So which means that as inflation goes down, I don't expect MPR to remain at 27.5. I mean, I should think this is the highest in 3 decades. Since I started banking, I'm not sure I've seen 27.5. So which means that it cannot continue, right? It has to go down. And double whammy, CRR at 50%. I'm not sure it will also continue. So if you look at CRR at 50% and look at MPR at 27.5, it's just output destruction. Okay, so can you grow destroying output? The answer is no. So at a point, things will start going down. I see that start happening from Q2. In my own theory, I believe that as from Q2, at worst by July, I start seeing, because once the harvest is out, harvest is out in July, August. You see food prices start going down in August. In the villages in those days, you know that in August, once after the August break, farmers will start harvesting dry maize. They will start roasting yam. Check Lagos. Nobody roasts yam in June. I hope you know. They roast yam in August. And that's why the surplus yam is there. Check. You see, and go and check inflation data. As from August, it starts going down in Nigeria. You want to check inflation data, food inflation, year on year. Just go and check it for 30 years. You will see it. And that's the reality. So you need to research into it to actually see how things will move. So I see this thing coming, and I believe that with exchange rate also coming down, because I had discussion with many people in Central Bank, and they said to me, oh, transparency will bring this. We thought it was a joke in December. And when they started the new system, you saw how rates have been coming down. And with the improvement in the system, I believe that with transparency, the rate will go down more. That will allow people to do many things. Dangote refinery is up and working. We also have what I call refineries. 40% of our foreign currency usage or utilization, that generally for petroleum importation. And once we take that out, it means that whatever you export comes back to you in whole. You don't have to use that to subsidize anything. You don't need that to import anything. You hold that net position that allow states and allow government to do many things and improve the fiscal environment. For the first time in Nigeria, last year we raised domestic dollar bond in Nigeria, $900 million. And Nigerians put their money, which means I don't have to go to IMF, World Bank, anybody's rating for me to even raise foreign currency in my own country. That is improving the operating environment itself. So for me as a banker, I sit back and ask myself, 2025, from my own graph and my own analysis, it's a positive year. And that the reform is here to stay and it has improved the operating environment tremendously. Thank you.
Thank you. Thank you so much for that, Shegu. And indeed, as you were talking, I was saying amen to a lot of the prayers. Yes. So let me come to you, Obiageli, and pose the same question. How do you think telecommunications will continue? Because I know it already contributes a lot. How do you think it will continue to contribute to economic growth?
Thank you so much. I'm welcome to be part of this panel. I hope I'm audible. I always get the feedback that I need to protect a little bit here. I hope I'm audible. So, I think if I speak on behalf of this team, we definitely would echo the views that have been expressed already today. Is this better?
Better. Thank you.
Would express the views that have been, would absolutely support the views that have been contributed today. Telecoms is really about communication and connectivity, right? And that's fundamental to every single sector and business in Nigeria today. Financial services, to your digital influencers, we cover all of it. So we'll continue to support in that method. I want to say that the telecoms sector, as you know, from a GDP perspective even, is the second highest contributor. Information and telecoms, I believe, is the second highest contributor to GDP. We hope that will continue for the many reasons that we about already. I think we contributed 14% to GDP, and in the space of the last 10 years, that pretty much doubled. So you can see the growth has been massive. Do we hope that the next 10 years will also bring another doubling of contribution to GDP? Absolutely, yes. I would say telecoms also massive contributor in terms of tax. Last year, the telecoms industry, so I'll take MTN out of it, given our financial performance last year, but we are a strong taxpayer as an individual corporate anyway, but nearly ₦1 trillion contributed to government coffers through taxation. And also, don't forget, we also invest quite heavily. We might not have invested as much as we would have liked last year, but certainly nearly $1 trillion in capex investments, because we have to keep the quality of the service optimal for our subscriber base. And I think lastly, we are a significant employer of people, both directly and indirectly as well. So again, that will continue. So we hope as the economy recovers, we'll be able to support in those main ways.
Obiageli, not so fast. So I for you. Given the recent 50% increase in tariffs, and of course, considering what Taiwo, Shegu have said around the hardship and the suffering and all that it's going on, how do you plan to balance the need to increase these tariffs and with ensuring that the telecom services themselves remain not only affordable but accessible to the lowest class?
Thank you very much for the question. And it's a question, we're all subscribers in this room, and I know that anxiety, the anxiety that people are feeling when they see 50%, it was the 100% that they wanted, but they only got 50%. Let me just be really clear about a couple of things. So it's not going to be overnight. Your tariffs are going to increase by 50%. Okay, let's just be really, really clear. What the government said is up to 50%. And there's a clear process involving NCC, our regulator. So we can't just say, okay, overnight, 50%. On a product-by-product basis, we're going to go to NCC and say, okay, this tariff, can we optimize, can we increase this? There will be some tariffs that we probably will reduce as well, right? So there is that balance. And trust in NCC, it has to balance the sustainability of the industry, which is why the tariff increases. You would have seen the CEO, I think probably this time last year, going around pretty much saying, sustainability is a critical issue. Our costs have gone through the roof, OPEX particularly, gone through the roof. We can't invest, etc., etc. We need these tariff increases. There hasn't been a substantive tariff increase for years, etc. So there's a rationale behind it. So NTC is balancing that sustainability with the need to really make sure that consumers are getting value, okay, especially bottom of the pyramid, people that don't have access to these types of services. So we are very alive to that. Our customers, we don't take our customers and subscribers for granted. So we must deliver value. So as we are working with NCC and going to them and saying, okay, for this tariff, we want to change this, we're consolidating tariffs, so you'll see a reduction in the total number of tariffs to simplify it, to make it a lot easier for consumers to make decisions around, okay, this tariff actually suits me. We are going to be a lot more innovative as well in terms of there will be tariffs that, that maybe the digital influencer that doesn't do the traditional 9 to 5, maybe they're doing a 5 to 9 as a lot of people do. Maybe the rates might be lower for those. So we will find a way to balance it, but overall, be able to cover our operating expenses. That's really the key behind the tariff increase. So that's what we hope to be. We're very alive to it, very responsible, and we must deliver value. There's a lot of competition. And again, with this opportunity that the government has given in terms of up to 50% increase, you can definitely see some operators will say, we're slashing. I'm sure some people will come out and say, we're slashing our prices. So there will be a lot of competition, which requires us to be responsible and to make sure that we deliver value.
Thank you, Obiageli. Very well said. I saw Femi nodding as you were speaking, so I'm sure he wants to contribute to that.
Yeah, thanks, and good morning again, everyone. I know the unions are trying to listen. I saw something in the paper yesterday that they're going to protest. I haven't engaged MTN on this session, but I consult in this industry across West Africa. It's a big challenge. I strongly agree that the tariff should have gone up. And the last time NCC approved tariff increase was 2013, 12 years. There's been a lot of challenges, economically, devaluation of the currency, inflation. So this is a sector that requires a lot of investment. So the cost profile has gone up. Almost every capex in this sector, whether, even a lot of OPEX in this sector is actually dollar-driven. We are just very few players that play in the consulting space, in the software space, that deliver services to the Nigerian telecom sector. Most of the consultants or OEMs are actually foreigners, and to me it's been a big challenge for them to invest. And if we talk about we want to really improve in education, the MSMEs needs to do more businesses, health sector, we can't do this without the right digital infrastructure. So we talk about digital economy. There must be a lot of investments in the sector, and I haven't seen much in the last 2-3 years, very painfully. And I see the quality of service, if we don't take time, actually going down, actually impacting most businesses, whether businesses and consumers. So I strongly stand on the side of the telecom sector and the NCC for what they've done. It's actually long overdue. What I see, actually, the telecom sector should do, my advice is actually more of what she's actually explained around tiered tariffing. So you've got to do the tariff in such a way that you take care of the low-income earners in such a way that, Kenneth, you're not looking at me, you are not one of them. So your tariff will go up. You're targeting 50 or 70 for the likes of Kenneth and Sam. Then we look at the low-income earners. We probably average that 20. So Kenneth, the likes of Kenneth, will balance it out, and we'll still be able to achieve their 50%. Thank you.
Thank you, Femi, and many thanks for not including me in that bucket with Kenneth and Sam. So Femi, still with you. How do you see advancements in technology driving efficiency and productivity within the telecommunications sector?
Yeah, thanks for that question. A couple of things actually happening in that world, in the telecoms world. 5G, for instance, we've actually not really optimized the use of 5G. And by the time we keep expanding the 5G services, you see better connectivity, latency, quality of service will improve. If you go to, we don't have a lot of Gen Zs here. Most of those guys do their businesses Wura, you're probably a millennial, not Gen Z. Yeah, you're raising your. So, the reality is that if we don't have 5G enabled properly across the country, we're going to struggle, especially for the SMEs, where even the big players, the oil and gas, the financial services. So we are almost reliant on digital services going forward, which we expect that the 5G investments would actually enable. The second thing I look at is actually, we talk about AI, ML, and Nigeria used to be, investments announced by the US government, Trump, $500 billion this week. Huge investments. Elon Musk was saying, no, I don't think we have, and the Microsoft CEO said, I've got my $80 billion ready. This is the game that everybody needs to be in. We are not close to it at all. So to me, AI, machine learning will drive the future. So we need these players, the telecom players, to actually invest in the 5G services. And China is already doing 6G anyway. So we just need to we need to move into 5G seriously, so that most of the services, new services that we can render, you can render, these consumers can render, would actually improve drastically. If you look at the IoT as well, we've been talking about IoT solutions forever in Nigeria. People have been in IoT, providing IoT services in the last 10 years. If you look at the oil and gas sector, if you talk about security in this country, it's IoT that is going to drive it. So if you see cameras talking to each other, oil and gas guys knowing, it will enable, if you pick oil and gas, drilling will be enabled faster. All this production that we want to actually increase is through technology. So people won't waste time trying to drill forever when you have sensors that can be sent, that can tell you what's actually happening. So we need investment in those spaces, big data analytics, cloud computing. So there are lots of things that this sector can actually help a lot of us, businesses and consumers, to actually make sure that we can, number one, increase productivity, actually optimize costs, and even provide work for for Nigerians. Thank you.
Thanks so much, Femi. IoT, Internet of Things. Femi thinks everybody here is a telecom expert like he is. So let me just pose the same question for Wura. From a financial services perspective, how do you see advancements in technology driving efficiency and productivity within financial services?
Thanks, Chairman. So the biggest things that we see across the globe is the use of AI, right? And over the past 2 years, generative AI is starting to take root. The amount of investments being made at a global level, the amount of resources being devoted to this is significant. We are far from it locally, but when you look at the global context, a number of interesting use cases can be seen. So you have use cases around improving customer experience, using virtual assistants, using chatbots, using AI in credit decisioning process, reducing the amount of manual inputs that goes into that. That's going to drive operational efficiencies. In fact, our CEO survey that came out just this week, 1/3 of CEOs are already seeing positive impacts on revenue and productivity from leveraging AI. So I think it's about local players also embracing. And I think as second wave adopters, potentially, that we even start to get a lot more benefits. So the first wave have invested quite a lot exploring numerous use cases, right? So for us is to then tap into that and just hone in on the successful use cases and see how we can tailor and adapt that to our local environment. But in terms of improving operational efficiency, improving productivity, improving revenue, AI is a really big factor in there. Then the second thing I would also point to is RPA. So a number of entities locally use bots, right? And but the scale at which it's being used, there's still a lot of room to grow in that space. So streamlining your processes so you can automate and then just free up your people from the mundane tasks, so that you can quickly see the impact on your bottom line, even on your people, especially with the rate of attrition that we're experiencing at some point. So for me, it's AI and then RPA as well.
Thank you, Wura. So that we can take questions from the audience as well as the people online. Let me quickly go to Taiwo. We've had a lot of conversations around fiscal policy, economic outlook. Given all these conversations, are there specific opportunities that you see within any of these sectors? We're discussing telecoms, financial services, and then what are the type of risks that you can share with us as well?
Yeah, thank you very much. So I think, it's important to set our expectations based on what the data is telling us and be realistic. There's nothing wrong with being optimistic, but don't be pessimistic. Now, I like to just be in the middle, speak to data. If you think about the tariffs on telecoms that has been properly addressed, people will give that as a reason why they think inflation will go up. But if you look at the data again, it does not support that conclusion. As of today, telecoms is 1% of the CPI. That's the Consumer Price Index. They are planning to rebase it. Results should be out by the end of January. It should be between 2.5 to 3%. Let's assume the upper end, and it's easy to calculate even without rebasing. Take the revenue of that sector, divide by GDP of Nigeria, it gives you an idea of 2.5 to 3. Increase that by 50%. It gives you 150 basis points. Express 150 basis points as a percentage of the basket, it gives you less than 2 basis points. This is 0.02. So the inflationary impact is insignificant. One thing about expectation is, if you create an expectation, it will be self-fulfilling. So that's why we should just work with data. And I made that point before, if everybody thinks that Naira will lose value, they will change their behavior and make Naira lose value. Right. So, but if you work with data, things will play out as they should. The opportunities, in my view, are bound everywhere, across all sectors, including the dimension that Trump is bringing on board. And I'm careful not to speak too much about Trump because the press will take it and say, the little one that I put on Twitter, they said Nigerian government react to America. So and I was not reacting to America. So if there is a press here, please report it correctly. They are here, so they should report it correctly. Don't create unnecessary panic. But 2 of the executive orders that Trump signed, I thought were interesting. He said he wants to set up the External Revenue Service so that they can tax the rest of the world instead of taxing Americans. And I said, how do you do that? I suspect they will remind him that the US Border Protection Agency is already collecting taxes from the rest of the world. Maybe they will rename it. But all they can collect from the rest of the world is tariffs. And the more you hike tariff, the person that pays is not the other country, it is your people. The Americans will pay. Their inflation might go up and then Fed may not cut rate as much as they want. That's the part I see. But the positive side is that whatever it is, there is a supply delta. China cannot supply as much to the US anymore, EU as well. They'll be looking for alternatives of where they supply to. And that excess supply means that for us, prices will come down. So which is positive. But the other interesting dimension to this is Trump says, we're going to tax the rest of the world. And then in another executive order on the OECD, that's the Organization for Economic Development and Cooperation, he says, you should be reminded that we're a sovereign country. All this your base erosion profit thing that you're saying cannot work in the US until we pass a law to do so. The same person says, let's tax the rest of the world. That same person is reminding the rest of the world that you cannot tax the US. So it's as if there's a different rule for America and there is a different one for the rest of us. So those things present both the risk and the opportunities. If you look at manufacturing, if you look at telecommunication, financial services, some of the reforms we have in the tax bills alone are transformational. businesses are going to be getting significant amount of cost reduction in their capex and services up to 7.5%. That's significant. For some of the financial services that have operations outside Nigeria, you have unilateral tax relief. 100% of the taxes you pay abroad, to the extent that it's not more than Nigerian taxes, you get the 100%. Today you get 30%. That's a big move as well. And then if you look at the tax bills, you see a section we call priority sectors. I would actually encourage everybody in the room, because that gives you an idea of the focus of the government and the direction of travel. So in those priority sectors, you see where we are trying to incentivize significantly to bring in more productivity and value to the economy. Overall, I actually think that every single sector will benefit and do better in 2025 than 2024, and it is not a prophecy. It is data-driven. Thank you.
Thank you. Thank you, Taiwo. And indeed, you do back up everything you say with data. I think I'll stay in my safe space and take Frank's advice that Trump only has 4 years and it would soon be over. But let me come to Shegu. What are the main opportunities and competitive shifts that you see within the financial services sector? Perhaps 3 top ones that are uppermost.
Let me not say top 3, because if you look at the government and what government stand to do is to focus on areas of deficit. Number 1 will be infrastructure finance. You want to see that everywhere. Power, there's no country that ever developed in the world without electricity. And 21st century development, or even 20th century development, has been 20th, 21st century, and maybe 22nd century, on 3 things: fossil fuel, cement, and iron. Check everything that you have. It's based on those 3: fossil fuel, cement, and iron. Your bridges, your road, your rail, your car, your plane, your everything. That is your civilization. And that civilization has not come here. You don't have rail line. You don't have good roads. You don't even have roads that are well paved that you can even walk. In Europe, you don't see bare land. But the best of places in Lagos, you see bare land everywhere. So 50 years behind, right? So you still have opportunity infrastructure to go ahead. Our fossil fuel will still be here. So you need electricity to come in, infrastructure to come in, and government will want PPP because government cannot do it alone. So those things are very important. Non-oil exports is something that all of us have to work with. And that's why ratings will come down for them, to support industries, to support new. How many manufacturers will borrow at 32, 33% to go and set up a new factory? It will be difficult, right? So, and that's why I believe that rate will come down for people to take that advantage and set up industries here and be able to export. Is important. Non-oil export is important. And the 3rd one, many Nigerians don't like it, but I always say that we need a credit economy. And we need orientation. We need to tell people why credit is important. Because in an inflationary environment, it's actually cheaper to borrow. My sister, a teacher, has been saving money and put it in the bank and did not borrow. And then devaluation came. And then the value of items and everything went up 4 times. Practically, should not be able to buy that thing except I augment from my pocket. But that's the truth. But if they all understand the credit economy and they can take advantage of that and buy most of that thing, they will discover that in 2-3 years' time, they're actually better off borrowing than waiting. And that credit economy needs to come. People need to understand that. I'm not asking that banks, you guys say don't mind bankers. They want people to come and borrow from them. But that's not the truth. is the only way to get the economy running and run fast enough and people enjoy life. There's no point saving for me to die and people are after me will come and take it. Whereas, why don't I just enjoy that life and live that good life today? And that's why the credit economy, the retail economy is very important. And I will all take advantage of that. Manufacturing is given. But again, it is something that we need to focus on. In my own field, I always say, what are the industries with moderate risk and that you have what is called presence? Manufacturing is that, because you cannot have manufacturing, I mean, you can't have it in the air. You must have concrete on the floor, you must have equipment, you must have something to start manufacturing. Mr. Ogbeche cannot load his fuel on the floor. He must have a tank farm, and he must have trucks, he must have everything, his presence. He can't take that tank farm anywhere. You know, it must be on land. So that land has value, that tank has value, everything has value, you grab it. It's different from something different, right? And then that gives us all opportunities for us to bring this economy up, because no matter whatever we think, no matter whatever money you make, if the economy is not growing, to get to a time that you yourself, you stop growing. Thank you.
Thank you. Thank you, Shegu. Thank you, Shegu. And, okay, thank you. Given in the interest of time, and Shegu, we will be coming to you again for another session specifically on credit economy, because with it would open the economy for a lot of Nigerians, particularly those of us that are not with Kenneth in the upper class. Just to go to the audience in the room and online, I know there are lots of questions. I see hands up already. I'll defer to my non-PwC colleagues. So apologies, Cyril, if I don't look at your direction. It's deliberate. I would start with you, sir. Can I have someone give him a microphone, please? Thank you. Thank you, Kenneth. I've given him one. Yes.
Thank you very much, PwC, for this enlightened program. And let me thank the panelists. I'm really very happy with actually the analysis that is given, especially, coming to the last part where the MD of First Bank, mentioned something very critical to me. When we said we want to grow an economy, we want to do so many things, he mentioned something about power, which I didn't see it coming out, very well until he mentioned it. The truth is we cannot do much. We mentioned manufacturing. I've not seen much of probably, the opportunities, because the truth is when you look at power, I think a lot of people take a backseat, and we've not been able to study very well, and I will drag that into probably especially FIs, financial institutions, which my brother is part of. I think we don't understand that sector very well to tap into the potentials. And we believe that we have issues, policy dimensions and so many things. But notwithstanding a lot of opportunities, Nigerians and everybody must start painting it to be able to tap into it. I can see opportunities if we understand it. Generation. Someone mentioned today that probably about we generate 4,500, 4,000 to 5,000 is probably more, kind of. But of course, generation is different from transmission and distribution, kind of. And what are the issues there? Are there issues with gas? Is there opportunities in about 75, 80% of our generation comes from thermal? Are there opportunities there? We flare gases, our gas that goes input into, generation today is still priced in US dollars. Is there incentive, is there anything government is doing, or even the private sector, to really go in there and see how you can really, move. Those are opportunities there. A lot of, the minister will tell you that probably we have potential of about 12,000, 13,000 megawatts, being generated. Are we transmitting it? If we do, is it to needy area? If it's to the needy area, what about the level of interruptions? So we're discussing, manufacturing. What are the opportunities in delivery to those environments? Is there something that private sector can tap into and get into it, even if we increase to say 12,000, but your increase is actually tailored at the existing facility, injection substations. So I need to really move from Asaba to probably Enugu. A disco we have to really fire to those environments before, whereas you should decentralize where that generation goes into, which is easier for discos to live. A lot of opportunities, the transmission lines, can we start doing it? A lot of things. I think we need to really study more about these opportunities. And a second cash flow, can be created. Your money will come back. But I think we need to know those potentials. Two, we also need to know the risk. A lot of risk acceptance criteria, my brother will know. When those things were designed, is born out of some of these specialized environments. People have not taken enough study. You can create opportunities, you can utilize it, and the risk will be very low. So I just want us to continue to look at that sector. Is very important. We have a lot of opportunities in there, and things must actually move. Thank you very much.
Indeed. Thank you. Thank you. Okay, do go ahead. But please, if we can just keep the questions brief, that will help us address them as well. Thank you.
Yeah, my name is Roundtable. And when Shegun was making the presentation, I'm actually happy that Taiwo tried to corroborate what I want to say. As he was making it on the interest rates, and I put down, our interest rates increases the cost of production, reduces the production capacity, reduces supply, increases the price of the commodities, drives inflation, increases closures of SMEs, increases unemployment, reduces the value addition and multiplier effects, and reduces the GDP of the country. So too much emphasis on fiscal and monetary on financial and monetary policies have been killing the nation. 95% of narratives have been on the monetary and financial policies. FDIs are temporarily chasing treasury bills and high interest rates. Where are the FIDs? The FIDs are the long-term, permanent, productive, unremovable investments where we will utilize our raw materials. And that's why the good news that the IOCs are gradually taking FIDs, even if they are the small pies. And when I say $5 billion, we are seeing in Tanzania, $52 billion LNG. We are saying Mozambique, $100 billion. I mean, those are the real money where we should be. And from the market facts, I think they are coming back to Nigeria because they found the environment much more attractive, flexible, and our reserves are so fantastic and sweet. So basically, what I'm saying is the wealth of a nation depends on the grassroots wealth creation.
Absolutely.
If we cannot spend good money, good incentives at our local levels to ensure that our raw materials are just slightly modified, the way the Indians started, it is cottage industry. You don't need too much power supply to do basic processing, alternative processes. So that is the only way that we can actually grow as a nation. And finally, I said, we should study smaller economies. Uganda. $100 is 380,000 Uganda shillings. The inflation rate has been below 4%. I haven't learned it's going up another 30%. The central bank rate 9.75%, and then the dollar lending 11%, And the prime rate 17 to 20% on UGX. And it's one of the top fattest growing economy in Africa. So we need to look at it. So if you are doing 27.5%, it's going to continue to fuel inflation rates.
Thank you.
We are lucky in the oil industry that we have 5% NCDMB fund and things like that. I can't imagine myself going to borrow at 33%. And there is no way, if you borrow at that 30%, we cannot domesticate technology. And we cannot be competitive against other economies. So those are the real facts that we need to go back, simplify our growth model, and go down to the basics.
Absolutely.
You started it, local content funding. Let's try and grow more and ensure that for every local government, you say, look, let's have 4, 5, 10 cottage industries from the local raw materials.
Indeed,
and put people into
indeed.
cooperatives. Thank you.
Indeed. Thank you. Thank you very much. Thank you. Shegu will take the first question in 30 seconds, and Taiwo will take the second question in 31 seconds.
Okay. Question taking. Because I don't know how to take it in a second. Mr. Joshi, right? Power sector, very important, but see, there's one principle. In any new sector, the first set of people that goes into that sector are likely not to be the best people that will be investors. So, rent political influence. Do fueling in third world countries. So if you just check the politics and economics of privatization across third world and developing world, so state capture comes in. The big guys come in, and they're not the best guys to run it. Then you have crisis. 10 years after, real guys start coming to the sector, and issues start changing. If you check people that bought all those assets, I'm not sure they ever ran a plant before. So failure is likely to come, right? And then you now have new guys coming in. Back, take out debt, all kind of things will happen, and that's happening. Once the industry becomes structured, sector becomes structured, risk profile start coming down, so appetite start changing, and good people start coming in. We call it, you used to teach us in those days, this competitive monopoly, all guys call it in those days. Free entry and exit, and then somewhere online you covet. It's happening. So the sector will become more profitable, but there must be restructuring that will work. And for the rural economy that you talked about, because of power, the industry cannot work in rural communities. My uncle used to have one in those days, where we have palm oil, palm kernel, and we sell the whole thing. And we have piggery, where we use the shaft to feed our pigs. Immediately power finished in Nigeria, my uncle became broke, everything finished. That's exactly what you're going to see, except in rural economy, we're able to have off-grid in those rural economy across local governments in Nigeria. Maybe you put 1 megawatt across, and then you have industrial zone in each local government in Nigeria. That's the only way you can activate rural economy. Without that, it's a mirage. Thank you.
Thank you. Thank you, Shegu. And Taiwo?
Yes, 31 seconds starts now. I like your point on the interest rates. And like I said, I've always had my very different views from analysts and even from the monetary authorities. And I do agree with all the analysis you made. I think that sometimes we don't interpret our data correctly, and therefore we make the wrong policy choices that can end up fueling the problem we're trying to solve. So some of the two important points that people tend to play around with is money supply. So we say money supply has gone up. Of course, there's the assumption that because the fiscal authorities are spending money, that they are increasing money supply. They're not. It's a transfer, right? They got the money from the private sector, they return it back. So you can target non-inflationary spending, but overall, unless you create new money, you don't fuel inflation because of government spending. That's the first point. The second one is money supply. We said money supply is now over 100 trillion naira. Of course, if you put that in the press, it looks like we're in trouble, right? But guess what? M3, which is the broad money, include FX. DOM account alone is over $30 billion. You are moving from 750 naira, 900 naira to 1.6. There's about 30 to 40 trillion naira there. That's just paper translation. It's not money that is chasing demand. When you go to M1, right, people talk about cash in circulation. They say, oh, it's 4 trillion cash in circulation is outside of the banking system. And I say, hold on, are you expecting cash in circulation to be within the banking system? It is called cash in circulation because people use it to buy pure water, that's what it's meant for. Both as a percentage of GDP is less than 2%. On the average, most countries have 10%. Per capita, it is 18,000 naira. It's less than $20. In fact, what's even $20? So we should be celebrating ourselves. Nigeria should say to the rest of the world, our financial inclusion is not perfect, but here is the number we have. We're doing great. You cannot have an economy where inflation is 30-something percent, and you expect the same volume of cash in circulation to meet. That's why people could not find cash in December. We need to even allow more cash in circulation. That's not where inflation is coming from. So at the end of the day, I do think that, of course, if we complement the various policies, monetary, fiscal, and trade in particular, which is what I see now is happening with the credit, consumer credit, with the policy around electricity as well. There's a lot going on around there. All of that, in my view, would help to move the economy forward and improve the livelihoods of Nigerians. It's more than 31 seconds, right?
You took exactly 31 seconds. Thank you very much, Taiwo. Indeed, we are doing great. That brings us to the end of this panel. I see a series already standing. Thank you, Obiageli, Femi, Taiwo, Shegu, and Wura. I'm sure everybody got value from this. And please, let's keep the conversations flowing. Thank you very much.
A quick picture. The panelists, please. Yes? Okay. Yeah, an amazing job from the panel. Thank you so much. Shego and Kenneth, you want to join quickly? Because I know we didn't take a picture. Frank? Yeah. Right after the picture, we're going into the next session on the real sector, the big boys. Bigger boys, I think. So, smile, guys. Thank you. 1, 2, 3. Amazing. A big round of applause. Thank you so much, Chioma, for an amazing moderation of this session. And thanks to all the panelists. Okay. Okay. All right. Very quickly, I would like to welcome Eniola Olatunji of Business Day on stage. Eniola will be moderating the next session. And while Eniola approaches the stage, we'll have very quickly a short video from Business Day rolling. Media team. I know our panelists are excited from the last session. Just hold on. Please hold on. Please hold on. Let's have some quiet in the room. Okay, don't worry. So can we have everyone seated, please? Thank you. All right, thank you very much, sirs. Okay, so we can start the video now. Media team, please. Maybe dim the lights a bit.
Businessday.ng and unlock premium content. Plus, you get 50% off your first subscription. Don't miss out. Make smart choices and seize new opportunities. Sign up now and elevate your business day. Visit premium.businessday.ng today.
All right. So we're very quickly moving into the second session, and I'd like to call on the panelists for this session. And like I said earlier, this session will focus on the real sector. We have Eniola Olatunji online, yeah, who's going to be our moderator for the session. I'd like to call on Dr. Gabriel Ogbeche, the Group MD of Rain Oil, to come on stage, please. These are the bigger boys now taking up the stage. I'd also like to call on Mr. Ayodele Musibawu Abioye, the MD of BUA Foods PLC. Is he here yet? Okay, in a bit. And then I'd like to call on Pedro Omotweme, the Africa Oil and Gas Leader for PwC Africa. A round of applause, please. Also our Client and Markets Leader. I don't know if Abioye is on. He's going to come. Yeah. So the MD of BUA will join us shortly, but I'll hand over the mic very quickly to Eniola. Yes, please. Okay, a round of applause. You look Fulani already. I thought you were a Fulani guy. Okay, over to you. And, hey, how can I forget my... Dele! Oladikwo, one of our partners and consumer sector leader in PwC Nigeria. Welcome, Ladele. All right, over.
Thank you so much. Thank you, everyone, for coming. On the last panel, I remember the moderator saying that there are probably no Gen Zs there. I'm here to represent, by the way. And I'd just like to say that normally people my age will not be involved in this conversation. So I'm very, very glad that I will be moderating this panel. But Nigeria has actually shown us a lot, so we have to follow everything going on. So in this panel, we'll really be talking about manufacturing sector and the oil and gas. According to the government's projection, the GDP is supposed to grow by 4.6% in 2025. And the oil and gas sector and manufacturing sector are the most important sectors that are going to drive this growth. So on this panel, we have very, very, very the right people that are going to take us through how this is going to happen in 2025. And I would like to start with Mr. Gabriel Ogbeche. So the oil and gas sector is projected to see about 10 billion investments this year. So how do you foresee the investment landscape in 2025? Where do you see this money? What sectors in the oil and gas sector, what part of the oil and gas sector do you see this money going to? And generally, what's your outlook for 2025 in the oil and gas?
Okay, thank you very much. I think the outlook is very, very positive and very exciting. I think we are in very, very exciting times. Our federal government budget this year about 49 trillion and predicated on crude oil production of about 2 million barrels per day and crude oil price of about $75 per barrel. Regardless of that, I think that it's a bit conservative. Nigeria crude oil reserves is about 37 billion barrels and producing only about 1.8 million barrels per day. If we continue at this rate, for 50 years, we will not have extracted all the oil we have in the ground. For a country whose exchange rate is struggling because we're not earning enough FX, I think we should actually have more like an emergency in crude oil production. We should extract as much oil as we can from the ground.
A few years ago, we heard the US president in his inaugural speech make what I call a clarion call, drill, baby, drill. Nigeria should actually be having that kind of clarion call. We should simply drill. Drill as much as we can. No, now let me tell you something. If we are able just to ramp up just an incremental volume of, say, an additional 500,000 barrels per day, at just a conservative figure of $60 a barrel, that will give us $30 million every day, $900 million every month, and close to $10 billion, just an incremental income. Now, imagine the kind of value that will have, or the kind of impact that will have on the economy, on the exchange rate, and everything that has to do with it. Now, the good thing, coming back to your question, while we are seeing this kind of $10 billion investment in the sector, is that thankfully, recently, a lot of activities have taken place in the upstream. For example, we've seen the Seplat acquisition of the mobile assets. We've seen the Renaissance acquisition of the Shell assets. We've seen Oando acquire assets from Ajip. We've seen Chapal Energies acquire some assets from Equinor. So there are a lot of transactions going on in the upstream. But I will tell you one thing. You know, the common thread across all these acquisitions is that we are seeing a lot of local companies actually step forward to play a key role in upstream, because I've always been a firm believer of the fact that Nigerians should step up and drive this process. Nigerians should step up and drill this oil and extract this value which God has given to us. So we are seeing a lot of activities. We're seeing a lot of investment in drilling. We're seeing a lot of, there's so much going on now. And I'm very, very sure that within the next couple of months, or not, let me just say within the next 1 year, we will definitely exceed the 2 million barrels, which government has predicated the budget on. Let me just stop there for now. Thank you very much.
Sir. So we're continuing on a positive note, just like the last panel. So we should expect positive things in the oil and gas sector also.
You know, let me stretch it, not just being conscious of time, because I don't know how much time each speaker have. Let me just stretch it a little bit. A few years ago, we're all aware that government did the marginal field rounds, where they gave out about 48 marginal fields. As of today, maybe only about 3 of them are producing. In the last couple of years, anytime you listen to the Minister of State for Petroleum talk, he keeps hammering on the fact that if you don't drill, the field will be revoked. If you don't drill, the field will be revoked. And it's very simple. It's not a plaque for you to get and go and put in your shelf. Drill or drop, because Nigeria needs the crude. So if you have the field, produce it. If you can't produce it, drop it and let them give it to the people who can produce it, because these things definitely have an impact on the economy as a whole.
Thank you very much, sir. Thank you. So, Mr. Pedro, would you also like to share your outlook for 2025 and also mention how you think the PIA Act will affect the investment outlook in 2025?
Yes, thank you so very much. Let me just follow on Gabriel's analysis of the oil and gas and where we see it going, and also talk about the PIA. So Nigeria's projection is 2 million barrels per day, but please note that that is for everybody in the industry, not just Nigeria alone. So that's a share, the JV share is there, the local players, all of that is 2 million, which based on what we are seeing now, it is easy to achieve on the basis of what's happening in the industry, and also probably exceed that. So following on what Gabriel said, I think the plan will be exceed this projection because it's good for everybody. Out of that 2 million barrels we are proposing to produce, about 270 million barrels per day is pledged already, which means you borrowed money up front, you pledge cruise to pay. So remove that 250 or 270 from your 2 million. That's actually what we have. And then you also now have the share of government of the 2 million. Okay? So I think it's better that we have that analysis, because sometimes I'm not sure everybody truly understands the workings of the oil and gas sector. So 2 million is the target. Based on condensate that we have, we can achieve that and even do much more. And I think like I said in the earlier panel or in the presentation by Shegun, the plan is that for all the new acquirees, they are ramping up production. So if you look at the rig activities in Nigeria, for example, you have a lot of rig activities because you just want to drill and drill and drill as much as possible. Because we are members of OPEC, we have to obey OPEC quotas. Right now, we're not achieving that, but I think we need to go back to OPEC to increase our production quota, because we have a 1.5 million barrel OPEC quota. You need to increase that so you can actually bring your 2 million to the market. On the PIA, I think PIA is a good work for Nigeria. When I started working in the oil and gas industry, I remember then we used to write report to our foreign counterparts and says there are changes that will happen to legislation. And that changes took about 20 years. Finally, in 2021, we got it signed. Now, 3 years post-PIA, I think there's a lot of work that still needs to be done just to ensure that all of the benefits that we wrote down, that we said we're going to provide, that benefit actually come into play. Like, you know, the dollar is very, very amoral. It doesn't depend where you are. The dollar is not religious, isn't it? So if the returns on investment in Mozambique, for example, is better than Nigeria, the investors are going to go to Mozambique. If it's better in Angola, they're going to go to Angola. So you need to ensure that both the institutions and the fiscal policy, all of that are actually enforced so that you can attract the right level of investments. So if the US, for example, is saying drill, baby drill, and if I'm a US driller, I'm going to stay in US and drill, instead of coming to Nigeria where I'm not sure what the rules are. I mean, recently when you mentioned some of those acquisitions, if you know how long it took for those acquisitions to be signed, that is not encouraging investment. I mean, the Seplat acquisition, how long did it take to be signed? The Chapa, how long did it take? That is not encouraging investment. So even the government itself needs to put their money where their mouth is, or put their mouth where their money is, or whatever it is. So that you say something, you follow on with the policy and ensure that people are encouraged to invest. I mean, if Dr. Buchi is going to put his money, you want to ensure that he has the right returns on investment. So PIA is good, but the laws, they're good, but we need to ensure that we actually go ahead and implement it and actually attract the investments to come to the country.
Thank you very much, sir. So over to Mr. Ayodele. So what are some key investments you think companies in your sector should look forward to so as to achieve sustainable growth in this year?
Wow, thanks very much. And I think it's good to come after the oil and gas, because after energy, what do you do with energy? It's basically to make food. I come from a food manufacturing business, and we use a lot of energy. So it's good to have them lead the pack. Thanks so much. So in terms of investment, of course, and I think some of the things I would say have actually been mentioned earlier. First thing we should be looking at, and in fact, before I say anything else, let me just take us a little bit back into many years. And I look at the time I graduated from school as a food engineer. Working in my first factory then up there in the north, I can tell you that I never saw a generator in any of the factories I worked with, right? And I can also say to you clearly that most of the products or input, as it were, that the factories were working on at that time are coming from agriculture. So is it cotton for fabric? It's coming from agriculture. Is it groundnut oil? It's coming from the groundnut farm, right? Is it rubber for our tires? You remember Michelin, Dunlop? Where did they get the raw material from? They're all from agriculture. So we have it. So when we speak investment, and of course we also speak about sustainable growth in the sector, power, I think, is number one. A lot has been said about it here in terms of what is required. Our umbrella association said, I think recently, just last year, most of the industries, particularly those who access the grid, are only able to enjoy 11 hours in a day. And that 11 hours is also with the question mark. Is it the right quality? A lot of them are switching off the grid, all right? Recently, because of unreliable grid or grid collapses, as it were, and also because of the quality of power. So power is one area I think that investment should spur, which I believe will also spur our industrialization or manufacturing activity. That's number one. Agriculture, because everything comes from the earth, right? And everything goes back to the earth, as he said, those who knows better than I do. So reality is that agriculture is also another key important area we need to. The food we eat comes from the ground. That's the truth. And of course, almost everything comes from the ground. So we need to invest in agriculture. We need to, and I was saying before coming off the stage to a colleague on the seat that, look, it's not about ideas. Nigerians, we've got ideas, right? The problem is taking action. Sincerely, we just need to take action. And then once we take action and we have mass action, everybody's going in the same direction. So investment in that area is also one other critical element that is important to speak about. So agriculture, and for us as a business, we are currently doing backward integration into sugarcane farming. We have a farming estate of about 20,000 hectares in Kwara State. Just like other players in the sugar sector, we're just aiming to achieve self-sufficiency in this space, though it's taking time because of the capital intensiveness, and of course because it takes a lot of investment. Over $200 million have been sunk in that place, and we're still seeking for more funds to be able to achieve this. I'm sure if we can take this across all the critical areas, we obviously can be better for it, and the economy will also be better for it.
Thank you very much, sir. Thank you. So something very interesting about this panel is that there are two, Mr. Daly is on the panel. So my next question is to Mr. Daly Oladipo. One thing that has been very interesting for me personally, or that has made me very conscious of what's going on in the economy, is how it affects my pocket. Now, we know in 2024, the purchasing power of a lot of Nigerians was eroded by a very, very significant amount. And this will affect manufacturers, of course. We expect that it affected manufacturers last year. And although the last panel has tried to convince us that this year will be very, very good, we'll still have to think about how this will affect manufacturers and what are some ways they can mitigate this eroding purchasing power of consumers, Mr. Oladipo.
All right, morning everyone. Now, let me take it from where my namesake stopped. Inflation will happen, right? And even in our own assessment, we are looking at the mid-20s, maybe 25% or so, but it will definitely happen. And like you rightly said, that is going to erode consumer buying power. Now, in the real sector where we play, there are certain things that are sacrosanct. We must eat. We must dress up. Whether you like it or not, you must do those things. You must get affordable housing over your head, right? So there are some things that consumers will strive to do, and which means that there's always a ready market for the manufacturers to satisfy. The question is, how then do they meet those needs given the pressure on purchasing power of the consumers? Now, we've seen a lot of businesses in the manufacturing space try to rebrand. They've now done a lot of exercises looking specifically, and like Taiwo said, look at the data. Where are we selling? What are consumers buying? What do they have the power to buy? Since COVID, a lot of manufacturers have consciously looked at their product portfolio again to say, what should we be concentrating our raw materials, concentrating our resources on? What volumes should we be producing? How do we price those things? Because they need to protect volumes, first of all. Now, if you look at the results of a lot of manufacturing companies, even for those that are reporting higher turnover, by the time you look at the facts behind the figures, you ask yourselves, what is the volume? What volumes are you selling? So a lot of them are actually challenged from a volume perspective, and which is why they need to look at the stock keeping units that they are going to be selling. Do I move down from maybe a 1 kilogram bag of flour to a 500-gram bag of flour, because that will sell? Now, to us in this room, especially the Kenneth and the Sam, those might seem to be very, irrelevant questions. But for the man that is earning a minimum wage of 70,000, that's a very, very relevant question. And that's a particular demographic that companies in the manufacturing space, especially in the food space, that they are facing. So, number one, differentiation, branding. Number two, they need to look at a lot of data to determine what investment options are. The other thing that businesses are doing, I mean, in addition to the backward integration that Dele said, is you also need to look at your operations. You need to strive for operational excellence. What are those non-core activities that I, as a manufacturer or a food processor, what can I win out of my business without affecting quality, without affecting profitability? Now, a lot of businesses are on the route of outsourcing. For those activities that they still need to continue doing, they've outsourced them. For those ones which they believe that they don't need at all, they've simply cut them off, all in a bid to make sure that they protect margins and are still able to sell to their customers at the right price. Now, for me, and maybe my Ayodele will concur, it is inevitable that manufacturers will continue to increase their selling prices this year. The question is by how much and for how long are they going to do that? But clearly, manufacturers, just like their consumers, are facing pressures when it comes to prices, so it's inevitable that they will continue to increase prices.
Thank you so much. I hope we are taking down these nuggets that you are dropping, because so I'm very sure that last year some people, some of us here, even though like it's been established that everyone is very rich here, had maybe reduced the amount of fuel they had to buy or cut down on some things. So how do you think that the eroding consumers' purchasing power is obviously affecting the oil and gas sector? So how do you ensure that you drive growth and sustain demand for this, Mr. Gabriel? Then also.
Well, thank you very much. We know that when Mr. President came in slightly less than 2 years ago, the first thing he did was say subsidy was gone. And we immediately saw the price of fuel move from 200 naira to about 500 naira, and then not too long afterwards, naira was devalued or right priced, and exchange rate moved again from 500 to 900 and ended up at about 1,560 where it is now. You know, when I listened to Segun Alibiosu speak, the MD of First Bank, he said something. You know, in real terms, if you look at where the price of petroleum products is today, when you're buying petrol, say for 1,000 naira per liter, let me just round it up. When you recognize the fact that just less than 2 years ago, dollar was about, say, 500 naira to the dollar, you realize that just from an exchange rate point of view, the price of petrol has tripled. Nothing really has changed other than just the exchange rate. So if we are able to, in whichever way, increase our production of crude oil, whatever government policies they can come up with, if we can calm down the exchange rate, it will have some impact on the price of petroleum products. Of course, we've had the advent of the Dangote refinery, which is a great event for the country, and a massive push towards self-sufficiency in terms of refined petroleum products for the country. We are very optimistic that sooner rather than later, that will also help in calming down the price of petroleum products. But be that as it may, it is what it is. Price of petroleum products have gone up. Purchasing power has not gone up proportionately. So we've all seen a massive drop in the consumption of petroleum products. I mean, if you have petrol stations across the country, on the average, I think we've seen maybe anything between 20 to 25% drop in consumption. But having said that, again, we're a business, and as a business, you have to survive. So we are seeing all kinds of innovation. What else can people do? If people are not buying petrol, where is the demand shifting to? So we're all aware of the CNG initiative, which is being driven by the federal government, because CNG on a one-to-one basis is far cheaper than petrol, for example. I mean, if you fly into Abuja and you're going into town, and you will see some CNG locations just on the right of the road, and you see a very long queue. Vehicles are converting to CNGs. People are buying CNG kits because the truth is that people need to be innovative. I mean, it is what it is. So there is a massive shift. So we are also seeing investment into CNG, and Rain Oil as a company is something which we are looking at very, very seriously. We are also doing a lot of investment in LPG. So if you can't cook with kerosene, for example, you should be able to use gas, which again is cleaner. Sooner rather than later, we need to take electric vehicle very seriously because even though, I mean, if you travel out of this country and you go to Europe, you go to the US, 6, 7, 8 years ago, if you drive on the streets, maybe 1 out of every 4 cars that pass is an electric vehicle. But if you go abroad now, maybe 1 out of every 3 vehicles you see. It used to be Tesla, but now even the biggest brands, Mercedes, all of them, they are all going into EV because that is the direction in which the economy is moving. And Nigeria, we are not immune to what is happening in the world because to start with, we don't produce cars here. So we may live here and think that, oh, EVs will not catch up with us. But we'll just wake up one day, it has caught up with us. So some of us are thinking very seriously on investing in charging ports so that when that time comes, we will be ahead of the curve. But the most important thing is that the prices are very high. Income is not exactly matching that. Demand has gone down, and we're all finding creative ways of remaining in business.
Yeah, that's very true. Mr. Pedro, would you like to add anything to what he has just said?
Yes, I would. So let me start with the biggest elephant in the room, Dangote Refinery. Okay, and these are my personal views. I do not think Dangote Refinery will bring down the price of petroleum products dramatically. It will bring it down, but not dramatically. If you look at the mathematics of the economics of it, what you are saving is your importation cost and your holding cost. The price of crude is an international price. Dangote Refinery will buy crude from government or from whoever at international price. I know there is a lot of price over, said to them in Naira, I say, who is selling to who in Naira? Because if NNPC is a private entity, the NNPC has the right to sell crude at the price as a private entity. It's not determined by what the president says. Who is the shareholder of NNPC? So the shareholders should be determining at what price the NNPC should be selling crude. The private, and if you look at where the Dangote Refinery is situated, it's such a place that it can import crude from anywhere in the world. That's why it's in a free trade zone in Lekki. That position allows Dangote Refinery to import crude from anywhere. So why it's important that, and we should give credit to what he's doing, I do not see that thing crashing the price dramatically. You talk about the exchange rate. If it's buying crude in dollars, then it's going to sell at an equivalent number. Okay, so that's good, and we should applaud him for what he's doing, but I don't think that will dramatically shift and bring the price down to 400 naira, 300 naira, 200 naira. We're about 950. I buy your station, okay? It's about 1,000 in some stations, 950 in some stations, okay? It's not going to come down to 400 naira if we're thinking of that. So the innovation and creativity you mentioned, I think that's going to continue. The CNG, LNG, everybody's going to go look for alternative, including, for example, dropping your 4-wheeler cars and start looking for something more efficient. Some people are going to start using bicycles very soon and start using keke napep just as alternative. But so Nigerians should. I think one thing I've seen about Nigerians, we are resilient people. Okay, somebody wrote a book say tough times don't last. What people do when things happen, people innovate, they create. You know, people are already doing carpooling. I take your car today, you take my car tomorrow. Instead of going to a church far away, I go to a church nearby. You know, so that way, come up with creative ways to solve the problem. I think that's going to continue in a long time.
Okay, wonderful. So as two sectors that contribute very largely to the GDP, productivity and efficiency is very, very important. And 2024 was riddled with a lot of low productivity and very weak efficiency expansion in operational sectors. So now, this question is for everyone on the panel, but I'd like to start with Mr. Ayodele. How do you think technology would aid productivity, increase productivity in your sector? And is there any technological innovation that you are eyeing, particularly in your sector? Yes, so how do you think technology is going to aid productivity?
Thank you very much. But permit me, if you don't mind, to first of all disagree with my namesake that food prices will be, and I want the audience to have a calm belief, because we heard from the first panel about the fact that 2025 is not a year of shock like we had experience in 2024. There are a lot of hope. I think we also have a namesake, probably has left us, Mr. Taiwo Yedele, who also spoke about the incentives that the new tax policy is bringing to consumers, right? And also to manufacturers like us. So prices won't go up. I think prices will be stable, and if not, actually come down. If inflation comes down, every other thing also will respond accordingly. So let's have that faith and that belief that stability is here, the shock is over, and prices will not, will not spike as we saw it in previous years. And secondly, I think also there was a mention about productivity of food, that we should be expecting higher productivity in this year and next year, right? That will also help to kind of, bring down prices. Hopefully the energy costs did not erode that benefit away, hopefully. So coming to technology, yes, industry have come from embrace of technology. We do talk about industry 4.0. We're already edging to industry 5.0, and there have been talk around artificial intelligence, augmented realities, machine learning, name it, robotics, and all of that. Incidentally, we are in this country a little bit behind, but I think one thing that is, if there's anything that is running so fast that we need to catch up with, is technology. Because unlike before, where it takes 10 years before, and I remember, if you can cast your mind back, when we started embracing GSM, right? We started with the so-called Nokia and all of that, while the rest of the world were already using smartphone, right? But I think it took less than 5 years before we all dumped our 3310, or what is it called, popular, and then we're all today sitting with a smartphone. So technology is coming very fast, and I think with the help of the Gen Zs, which you are, right?
Yeah.
we have no option than to catch up very quickly, and those of us who are not digital native like you are, also trying to behave like you do, and pretend to be absorbing that quickly. Now, bringing it to the industry, and specifically to us as a business, currently we're investing in plant development, which is one of the critical areas we believe. Like my principal do say, our board chairman says, to address food security, we need to invest in production platform. How do you make sure that you can supply the food that is needed, and how we can produce more into the market? And those investments are coming with technology that are AI powered already. And currently, with our integration of our business 4 years ago, we are also adopting technology in 2025, particularly focused on AI powered business solutions in order to enhance productivity, focusing largely on our customer economy, that we believe is very critical, and also on our operational and maintenance efficiencies, operational excellence generally, as it were.
Thank you very much. Any other person in the panel would like to add to how technology, I think we would like to hear from the gas sector, how technology is going to drive efficiency?
Let me look at downstream, for example. I think I would rather talk about technology adoption in driving efficiency. I look at the downstream sector in Nigeria. You drive into a fuel station, there's a pump attendant standing by the pump who has to attend to you, and then you want to pay with your card. They need to bring the POS and then impute it and all that. And I asked myself, way back 10 years ago, I had looked at it and I said, this is needless. Because we all travel out of this country. You drive into a fuel station at 2 a.m., it's between you and the pump. You serve yourself, you put in your card, you put in your PIN on the machine, you fill your tank, and you drive off. And I ask myself, why can't we have that in Nigeria? So way back 10 years ago, we had said, what kind of pumps do that? They said, let me not mention their names so I don't give them free advert. And then went ahead and bought those pumps and installed them in one of our flagship stations. And we wanted to put in the equipment where you can come in and serve yourself. And then they say, oh, we don't have a platform that supports that. So we've not been able to do it. But Nigeria is ripe for that technology adoption because the technology is available. Now that the downstream sector has been deregulated, now that prices have gone up, now that everybody is looking for efficiency, that is one sure way where we can cut costs. Take away that interface on the forecourt and then see how people can serve themselves. I'm happy to say that's Joe Obaro, if I'm correct. I mean, he's very much on the tech space, the remitter and things like that. Joe, I think that's something you need to look at very seriously and help us provide a solution and the interconnectivity that can make something like that work. Well, there are other things. Let me go to the granular a little bit. Those in the downstream will be able to relate with that. Transportation and ensuring the integrity of the petroleum product that is being moved is being a perennial challenge. How do you load a truck with 45,000 liters in Lagos and send it to Abuja and be sure that when it gets to Abuja, your 45,000 liters is intact? That problem is as old as the industry. You typically will have pilferage of 300 liters. Once in a while, they will stretch it to 500 liters. Well, with petrol at 200 naira per liter, you can live with that. With petrol at 1,000 naira per liter, if you lose 500 liters, 500,000 naira is down the drain. Now, when you realize that the downstream oil and gas industry is a high turnover, low margin business, the margin is in the small numbers. So ensuring the integrity of the product becomes very, very important. So one of the things we are doing lately is bringing technology into that movement to ensure that with technology, the integrity of the product is kept intact from load point to the discharge point. The rest is about, I've talked about electric vehicles and things like that. Those are things that is being driven by technology, and we need to keep adopting and domesticating within the country. Thank you.
That's great.
Just to add really that from the wellhead to the street lamps, technology is going to be very important in oil and gas industry. Yeah. It has always been. The oil and gas industry have always depended on technology. So if you look at Nigeria, for example, we can use drones to monitor the pipelines. And you've heard about pipeline vandalization. So with drones, you can monitor the pipelines. You can put sensors on the pipelines. So when anything goes wrong, you know exactly what has gone wrong with the pipeline. For those of us in the upstream where you drill, and the drilling is quite expensive, you can use your AI to help you in reducing the risk of error in drilling the wrong wells. So you don't have what they call a dry well or whatever, spend a lot of money. So technology is going to be very important. It has always been and will continue to be very important in the oil and gas industry. Thank you.
Mr. Oladipo.
And then, for the FMCG business, there's some technology that is already being put to use, especially on AI. Being able, for example, to predict customer demand, how to connect the end consumer to the business, especially in the small and medium-sized businesses. That's already been in use. I think what we need to do now is to now scale it, right, to the businesses that can really meet the demand of the volumes that we have, of the opportunity volumes that we have in the market. I think that's something that needs to be done. Now, I'll also like to say from a very different perspective, technology. When we talk about technology, we're always talking about AI, robotic process, automation, etc. One thing we don't get to talk about enough is the actual machines on the factory floor, right? And I think we need to talk about that. That is largely still being imported into Nigeria. And we have people with skills to operate those machines. What I think we need to do, both from a business point of view and also government supporting with incentives, is to see how we can domesticate at least some elements of the machine and equipment development process. Once we can do that, it's going to increase the scale of businesses in Nigeria to produce, because they no longer need to spend FX on importation. And it will also, from time, from producing the small and the moderately complex equipment, we can start producing the bigger production lines that we really need to scale up.
Yeah, thank you very much, everyone. So 2024, 2023, there were a lot of policies that really changed both, a lot of things in both sectors. But going into 2025, we expect some more, or even our existing ones would continue to influence the sector. So I would like to ask, what are three policies, very fast, what are three policies that keeps each of you at night, keeps you guys up at night and gives you sleepless nights, and how are your organization trying to tackle these policies? Or how are you responding to them, so to speak? Yes, to the two of them.
I think the first policy that impacted us the most was the fuel subsidy removal. It was long in coming. Nigeria have always clamored for a deregulated downstream. I've been in this industry now for more than 30 years. And I know that for 30 years we've been talking, remove subsidy, remove subsidy, remove subsidy. But at some point it became like a cliche. Remove subsidy, but nobody had the guts to take the decision. So we just kept kicking the can down the road until one day we have a president who had the guts to say, enough, subsidy is gone. But then again, it came as a shock to the system, because you wake up one day, the price of petroleum products have gone up by threefold. And then you are now in an economy where, before, government just comes and says petrol is 97 naira per liter, and it's 97 naira per liter. But today, nobody tells you what the price is. Go out there and fix your price. So you drive on the Lekki corridor, you can get into 5 different petrol stations and get 5 different prices. So now you see real competition, but make no mistake about it, the margins are under tremendous pressure, which again is what you expect in a free market, in a proper competitive market. The other one is the exchange rate, the Naira devaluation or the exchange rate measure, whichever way you look at it. It's been a big problem. A lot of, when we listen to the MD of First Bank speak, or was it Taiwo who spoke about it? Last year was a year of bloodbath. It was a year of bloodbath. One side of the economy lost so much money, one side of the economy made so much money. I'm not going to mention those who made so much money. But I know that the manufacturing sector, the oil and gas, anybody who has FX exposure lost so much money. The biggest, some of the biggest manufacturing companies that we all know got so wiped that some of them, even their shareholders' funds went into negative territory. So that was a big problem. But the joy now is that, and then again, the challenge we had was not really what the exchange rate was, but the fact that you wake up every day, you didn't know what the exchange rate would be. So it was like the rates were changing per second, and nobody can plan in a situation like that. But thankfully, I think the worst days are behind us. Now we can see some stability. I've always argued that the problem is not what the exchange rate is, but let us know what it is and let us be able to plan. Today we can say in the last 1 month or more, we've seen calmness in the market. The market have calmed down. Exchange rate is about 1,550 naira. There is no panic that it's going to be 1.6 tomorrow. There's no, we are not getting, nobody's getting agitated, so we can plan. So these are the two biggest problems we've seen in terms of policy. But I am very optimistic that 2025 will be a very good year. Let's put 2024 and 2023 behind us. Let's bring optimism back into the room. Nigeria, a country of 200 million people, 200 million people to move around, 200 million mouths to feed, 200 million people to clothe, 200 million people to... I mean, you can't get it wrong in this economy once we get our policies right. And I think we are on the right path as of today. Thank you.
Mr. Ayodele.
Yeah, thanks so much. I think very little to add because it's all around the same effect. But I'd like to speak a bit more into the impact on the consumer side. Strictly speaking, FX volatility, subsidy removal and all of that affected every one of us across the socio-economic ladder reality. What did he also do was that actually made every one of us to recalibrate our economy, both personal economy and all of that. So bringing it that further is also to speak specifically to the fact that at that point in time, we were actually struggling to plan. The planning room or the boardroom, as it were, you don't even know as a CEO what to present to your board. What scenario? We've got scenario 1, 2, 3, up to 10 scenarios because you don't know what the FX will say. And of course, you also don't know, because we also import a lot, you don't know what the custom duty rate will be tomorrow because it's also on, all around fluctuating and thereabout. That primarily brings also all of that put together, the policy as it were, bring pressure into the consumer space. We spoke earlier about, or you spoke in one of your questions about disposable income consumers. That is one of the after effects. Our Umbrella Association reported also recently, I'm speaking to MAN now, unsold inventories from industrial manufacturing warehouses was in excess of 1.2 trillion at some point. Today we don't know what it is. Now, if there's any stay awake, that will be one of it, right? Because keeping inventories is dangerous. You tie down money, and then you also have you run the risk of obsolescence or damage or theft or whatever it is. So, looking ahead, we're optimistic. From what we heard earlier and from what we've been hearing everywhere, we're optimistic. I believe we have all recalibrated today. I saw a joke online the previous day when I don't know whether it was Oyedele or someone who says that because he's now in band A, and whenever he wants, he gets home, only his ACs in his room is turned on. Then everybody in the house comes towards him to stay together. So what am I saying? The fact is that there's always a positive side of the bad side. So I think we've already received a shock and we are recalibrating. So what we are looking forward to is the softening of the space such that we can then begin to live. On the space of food, as it were, and I like to speak about food because that's my industry. Food, as you know, is an essential commodity. The competition for the pocket, right, is very high. I hope MTN is still not in the room. Oh, they're still in the room. Okay, good. If you have money today, of course, they tell you data is life, but I think food is life more, right? So if you have money today and you have not eaten, I'm sure the first thing you think about is food, because every one of us need food to eat. And what we are doing basically to be able to address that gap is to see how we can innovate into consumer-friendly products, give the consumer what they want. Previously, you would hardly see a sachet product in the market, right? So why has sachet market suddenly become order of the day? Simply because of affordability pressures. And because you still want to be able to serve the consumer a taste of what they want to enjoy. There are people who can afford to buy a bottle of Coke for 5,000 naira. I'm sure we have some in the room, hopefully, right? But there are those who cannot afford it, that you need to give them that small bit of it. And that's one of the things that we're innovating in that space to make sure we can at least address consumer preferences and consumptions and still be afloat as a business. Thank you.
Thank you very much. Now to Mr. Pedro and Mr. Oladele. What are some each sectors, what are some, at least 3 competitive shifts you think will happen in 2025, and how can each sector respond to these shifts?
Okay, I think looking at all the background information we have, looking at government focus, I would say in the oil and gas industry, what is government focusing on? Where is government putting the money? That's where area where you want to play in. So if it's CNG or like say Nigeria is a decade of gas, then as an investor, I would like to put money in that area because there are incentives that are being provided in that space. Innovation obviously is important. Whether you're in downstream or upstream in the oil and gas industry, you need to innovate because either you innovate or you die. Number 3, I would say there will be need for further collaboration. We have seen acquisition in the upstream sector. I think we're going to see a bit more acquisition in the downstream and collaboration in the downstream also. There are some assets in the downstream that will no longer be relevant, in my view. So if Dangote come upstream and is already upstream and producing, then some of those assets in the Papa area that were the storage facility and co will now become redundant. So what do I do with those facilities that are no longer useful? So there's going to be a lot of change. And of course, if I'm a user opportunity to market PwC, we are here to support you as you navigate this volatile and turbulent environment. Thank you.
Thank you. Okay, so maybe just a couple of points to add. We see businesses will continue in their drive for operational efficiency. They will want to do that are value and to themselves. So we see the drive for operational efficiency will still continue across all strata of the industry. Another thing that is also likely going to happen in 2025 is that a lot of businesses, especially in manufacturing, will also be looking out for export opportunities. Now, we know that the Africa Continental Free Trade Agreement is there, and Nigeria is now a signatory. We have seen some businesses, making inquiries and making inroads across the West Africa sub-region, and also some in the East Africa markets. What we see is a lot more businesses looking for those opportunities. But for us to be successful, for Nigerian companies to be successful, I think a couple of things need to happen. One is we need to make production more efficient in Nigeria. Again, it goes back to addressing issues around energy sufficiency, around raw material pricing, around distribution and logistics. Nigerian businesses, Nigerian products still need to be a lot more competitive before they can succeed across Africa. That's one. Number 2 is we also need to address government policies, especially around things around the ports, right? How do we make export business easier for Nigerians? How do we make import business easier for Nigerians? The more that the ports and the customs can work more efficiently, then a lot more manufacturing businesses will be encouraged to look out for export opportunities. Those are some of the things we see happening in 2025.
Thank you very much. Please, a round of applause for my amazing panelists. And that will be the end of this panel. My name is Eniola Olatunji, and it was a delight moderating this panel. Thank you very much. Thank you to our Gen Z. A round of applause for the panel. I don't want them to come down just yet because they're celebrities. So, Chijoke, if you could just wrap this up, closing remarks, and then we take a picture, and then we'll close for the day. So don't come down yet, because once you come down, this room is going to be chaotic.
So I guess I'm the one keeping everyone from lunch. Not a great place to be, but I think I can stay here. Yeah, that's fine. So I'll say, first of all, thank you to the panelists once again, and thank you everyone for being here till the end of the program. I think the conversations today have been very robust. I've thoroughly enjoyed myself, and I like the positive spin that's come out of these conversations. It seems to me like 2025 is the year of positivity. You know, we talk about the FX rates being stable and potentially coming down, if you listen to Taiwo, or things around the fact that inflation may not necessarily be as high as we think it will be because of the base effects. I think for me, as businesses, we need to also start thinking about how to reinvent our models. I really like that point that Shegun Zak made. And it's something that we really have to do because 23 and 24 really caught us by surprise, and we should definitely start looking at how to be a bit more proactive going forward. And I'll leave you with a comment Taiwo made that was very instructive to me about, just use the data and don't act on those expectations because they become self-fulfilling. Thank you very much. And I understand we will be sharing our report subsequently, and look forward to it. Thank you. Enjoy the rest of your day.
You can just join the stage, and then we'll have the pictures taken. We do have meal tickets in your packs. Please don't forget that lunch is served very quickly after this. Yeah. Let me join. Thank you so much. Thank you, our Gen Z moderator. Eniola, you did an amazing job. Well done.